Holy moly, I just ran up the stairs. I got myself I'm not supposed to have free advertising on my show. I am Al Moore, a host of the Get MorAlpha show. And whenever you're on this show, you are getting more alpha, maybe more than you care to. And in investing, alpha is it. Alpha is the ultimate pot of gold. It is what we all pursue in investing. And in theory, no one gets to have positive alpha consistently in theory, but then some people do. Today is what? Today is Monday, March 23rd, 2020. And now every day feels very momentous because we're in the middle of the coronavirus crisis. So that's what I'm focusing on, making up words. Dave Letterman used to make up words, folking, and then he starts saying the word for the rest of the show. So we'll be hearing the word folking for the rest of the show. Yes, I know it sounds like what it sounds like. All right, it's going to be a great folking show, folks. All right, man, I'm on a roll, and I haven't even had. This is my first sip of Coke. Wait till I've had half a can of Coke, man. I'll be gone here. I'll be going 500 miles an hour. It's light speed. Okay, today's roadmap. Let's get on it. Let's see how we look here. Oh, we look so good. Let's go to full screen here. I think I have the wrong presentation up on the wrong screen, but who cares? All right, here we go. Let me get this one out of here. Bring the correct screen share into here. And there it is, huge numbers. So the title of today's show is Huge Numbers. Okay, and I hope it's all working smoothly. This machine tells me I'm rolling. Oh, and I'll check my monitor. I've learned my lesson. All of you who've seen the show recently have seen me turn my monitor on when the show is starting. Okay, let's see here. Market update. Let me shut this one. I think I've picked up the wrong one again. Yeah, that's okay. Here we go. I still like myself. I had two presentations open, and I picked up the wrong one. Okay, let's go to page. Let's go to start. Here we go. All right, now we're at the start. Okay, let's pick it up. All right. See, I wish I had an engineer to do all this stuff for me. Covered myself up there. I'm back. Turning on my monitor. What I do is I go on Facebook and I go through the same steps that I ask others to go through to make sure it's all working, and it has. So that's good. Takes a sec. And the tricky part is I can't set it up before I start the show. It won't kick in until the show starts. So here we go. Let's see here. You can go here, I think. Yeah. And before, let's see if we're live here. Maybe not. Okay, we're live now. Okay, go to MorAlpha station. And we are. I see that. My monitor is working. Okay, we're on the air. All right, let's get to full screen. Here we go. Oh, turn the sound off on this. Now I know my sound is working. And when we go to full screen, we start the show. Okay, before starting, MorAlpha and I are not a broker, an investment advisor, financial planner, investment manager, hedge fund, or investment bank. I make no explicit investment recommendations, although the show is all about investing. But I don't want you to just do what I say because I say it, and please don't imagine that I think you will. And that's not my role here. My role is to educate you so you make your own investment decisions. Consult with an investment professional before you make an investment decision. I am unaffiliated and independent. My monitor says you don't see a screen right now. So let me give it a second. Yeah, okay, let me crank it back in. Pardon this technical stuff. There it goes. Now it's working. My monitor says it's working. Okay, good. So my monitor says you can see me. All right, pardon this technical stuff. This is live streaming and it's buggy, and I have a direct Ethernet wire now to the router, so I don't worry about wireless. Anyway, here we go. I'm unaffiliated and independent. I work for you. not for anybody else. I'm not trying to sell you anything. The show is for free. You're welcome. It's my pleasure. And I will succeed. I'm trying to build a show that will build a following so that then I can make some money from it somehow. I'm not sure whether I'll do live seminars or I'll charge for seminars online, or I'll maybe make the show a streaming show where you subscribe in order to watch the show. I'll see. I'll figure it out. But right now, I'm happy to spend time just building up my skill at presenting the show, as well as, you know, building up your knowledge. Well, I see my screen turning off, so I'm going to get out of this page in a sec. I believe knowledge improves investment success. I go through this every show. I teach all investment approaches, from buy and hold to day trading and everything in between. And there they are. There's a list of the approaches that I will end up discussing. Now, we've got coronavirus going on now. So now our focus is not on the broadly educational perspective, but rather it's on coronavirus and the impact on markets, the impact on our lives that it's probably going to have. It already has had, right? So here we go. Today's show is called Huge Numbers. Here's why. More than ever in our lives, you will hear now, because of what we're going through, the largest numbers you've ever heard in terms of, if they're economic numbers, you're going to hear the word trillions over and over again. Trillions is kind of hard to understand, right? 1,000 is a number you probably can think of and can relate to, and a million is 1,000 thousands. You could maybe relate to that. $1 million, right? You may own a house that's worth some significant fraction of $1 million, or wish to. But when we start talking about a trillion, we're talking about a million. Okay, so if you take no, that was correction. A million. That's a trillion. If you get a million, take the multiply by 1,000, you get a billion, and multiply by another 1,000, you get a trillion. So a million times 1,000 times 1,000. Anyway, so these are hard numbers to comprehend. So part of the show is to share big numbers and give you perspective when you hear the numbers. And one of the things I didn't put in a slide here, but I'll remind you of, is this: there are a little over 300 million Americans, and if we each put $1 into a pot, $3, pardon me. If we each put $3 into a pot, we would have $1 billion. So when the government says, I'm spending $1 billion, think right away, okay, that's $3 out of my pocket. So I'm going to say it again. When I say numbers, partly to check myself, there are 300 million Americans, 320, I think, million people living in the United States. And if we each put $3 into a account, that would be $1 billion that we can put in. So we have collectively an amazing amount of buying power that we use every day in this miracle of an economy that we live in. It's like no other ever before in history. And we're going to see those numbers in today's show. And here's right away, we're getting into it. Look at this image. This is a fantastic image I found today. This is for 2017, but these are numbers that give a fantastic proportion for how large the United States economy is compared to the rest of the world. And this is GDP. This is how much we produce. And what we produce is measured by all the profits of all the companies plus everyone's income. That's how much we produce, okay? And then we look at other parts of the world, and we see that China's economy produces 12.24 trillion in this slide. Now, think about that. They have vastly more people than us, and we're going to see their population and all this stuff in charts to come. Don't worry about the numbers right now. But yet we have the largest economy, and you're going to see that when you look at it on a person-by-person basis, we are an amazing economy, because there are other economies that do have more per capita income per person, but they are tiny little economies. We are the big monster. We are the gorilla. Make no mistake. And I want you to look at one other country, and then we're going to move away from this. But I want you to look at one other country on here that's really important. Right between the United States and China is a country called Russia. You ever hear of those guys? And look at how small, because the size of each little figure in here is the size of the economy. Look at how small Russia is compared with the United States. So don't imagine ever that Russia is a viable rival of the United States, other than militarily. They're not a political rival in the sense of they're not a communist leader that can change the world anymore and try to convert people into communism. In fact, they gave it up, right? Because it did not work for them. Here's China, who clings to something in the middle of communism and regular old free markets, and they're managing through it. But we see on the news they have their issues, and we have our issues. I'm not here to judge anybody, but I think it's a fascinating thing to look at. is to see the size of the United States, and picture this as a globe, as our whole planet, and how much of our planet's economy that the United States constitutes. There is a word, constitutes. Here's our roadmap for today. Roadmap. We're going to really talk about knowledge, because here's something that's going to happen now that we have coronavirus and now that we have huge numbers in front of us. We're going to start learning. A lot of people that have spent their lives really, this is not wrong. You spent your life not having to think about or worry about big numbers, have not. So when you put on the news and they go to that section of the news where they're covering how the market behaved, you're changing to sports, you're changing to a movie, you're turned off, you're watching, you're paying attention to other stuff. Now you will have more new knowledge because of this. Knowledge on many levels about many different things that I have a list here of the kinds of knowledge that you start to gain when you're a person that really actually takes investing seriously. Oh, yeah. Okay. So, excuse me. All right. And so, knowledge plus diligence is equal prosperity is my motto. And so notice something, I'm not pitching some option strategy to you, and I'm not trying to manage your money. I want to give you knowledge so you can prosper. Okay, the only way I think that I'll ever turn this into something that makes a difference is that I help you prosper. I spent 25 years of my life in capital markets, and I retired. I can't do my old job anymore. Those of you who know me know why, and if you watch the show, you'll figure it out. Because something has happened to my memory and my communication skills. And I'm just not able to do the nature of work that I did for so many years that I miss and that I love. But I've made up my mind to do this show irregardless, because I do have slides in front of me and they're a great cheat. And because this stuff's not, for me, technical stuff at all. I'm teaching you the basics. Even in my most technical shows, it will never reach the level of sort of technicality and the urgency and the realism of my job, which was to be in a transaction environment where you could make a decision and you could make a mistake and you could cost your company an immense amount of money in a blink, literally a blink. So that's why I can't work in that environment anymore. But I can do this. There's an old joke, those who can do and those who cannot teach. But then if you're great at teaching, who knows what you might be able to do. I'm going to figure out a way to twist that into a short little quip so that if somebody says those who can do and those who cannot teach, so I can have a counter to that. But anyway, I love teaching. I always have. Whoever worked with me can attest that I spent a lot of energy when I worked teaching everyone who worked around me and learning from everyone who worked around me. Because the people around me were PhDs, etc., people from all over the world. So I could learn about their culture and learn about their history and their amazing cuisine. And so it's all amazing. Learning is just one of the great things, right? Okay. So here we go. Let me get through this roadmap so maybe I'll get through this show. Knowledge plus diligence equal prosperity. Coronavirus update, so important, right? I've got a up to today update, up to 3 hours ago. We know it's changing every minute. Market updates, I've done them before. I'm doing a new one. I'm going over investment types again. If you've seen my show before, you're going to see the same slides again. I'm going to present them again because all of this means nothing if you're a person that is just starting to learn about investing and you don't know what a bond is. I'm going to briefly tell you what that is. Okay, I'm going to briefly tell you what an option is in this show. We're going to go over what is return and risk. What does that have to do? What does that mean? Return is what you earn when you invest, and risk is the reason you get return. You get return because you take a risk. But how do you measure risk? Well, we're going to review that again by looking at a set of investments, categories of investments, what kind of return they make and how risky they are, and show you how we measure risk. We're going to look at the huge numbers today. We're going to look at US GDP. That is a huge number. It was 19.39 trillion. Look at the slide. Look to your left there in pink. GDP was 19.39 trillion in 2017. It was larger in 2019. I've got 2018 numbers here. I don't have 2019, but it's okay. Very useful numbers. Anyway, we're going to look at gross domestic product, GDP. We're going to look at per capita income, how much each person makes. And by the way, not only in the US, I could have put international as well, because we're going to compare ourselves to the rest of the world. And we're going to look at how much debt our country has and what implications that may have in the coronavirus emergency that we're facing, because it could, and I will propose to you that very likely it will. The amount of debt we've assumed as a country, that we citizens have allowed our country to assume, could have consequences and probably will have consequences for the economy going forward. Why do I have coronavirus role players in here? Because I think that names of institutions and offices in the government get named and thrown around a lot on TV because it's happening right now live in front of us. And so again, that clutter of information that you're not used to consuming may block you from getting the more important information that they're trying to convey to you. Because hey, the moment we start hearing names of people that we don't know who they are, or the names of offices like a central bank, like the Federal Reserve, who are those guys? I don't want to know. Okay, but today maybe you are curious. I have a piece on Donald Trump. I'm kind of tough on the president, but not too tough. I hope you'll agree. Okay, I'm going to talk about conservatives and liberals. Prepare yourselves, both sides, because if you know me, you know I'm in the middle. I have things I love about both sides. All right, and so if you don't like that I'm in the middle, maybe you think I'm wishy-washy. That's okay. This is a free country. I'm not angry at you because you're an extreme left or extreme right. Not at all. Because we need people to represent all sides of the spectrum, so long as we can hopefully talk about it without being too harmful to ourselves. And I'm not worried about people cussing and being mean to each other on that level. I prefer people be polite. If you know me, you know that. But I'm not hypersensitive. I'm not thin-skinned. So, for example, Trump and his kind of ornery personality does not distract me for a second. Who cares if he's ornery? If the guy succeeds, we succeed. All right? So this is Alpha Lesson. First quarter of 2020, sixth lesson, but it's about the 7th or 8th show. Today's March 23. Let's get into it. My motto is knowledge plus diligence equal prosperity. So what do I mean when I mean investment knowledge? It's not just the stuff I teach in my shows, okay? Key knowledge areas for investing and for investors are history and geography to have perspective. The more history you may have, the more you may know why China has the issues that it has. You might never be angry at a Chinese citizen for coronavirus if you know China's history. I can assure you, because the average everyday person in China did not place themselves in this historical sort of line, an historical story with immense, powerful ebbs and flows. Think of the what do we call them? The flows in the ocean. Oh my gosh, I won't think of the word. But they're the streams, of water that go through the ocean. These are big, giant, powerful streams that carry the fish along. Are the fish responsible for the fact that they're going that the water in the Pacific Ocean maybe takes them around the ocean every year? No more than a Chinese citizen. We had a Chinese doctor. This gentleman tried to warn the world. And so how can you say the Chinese are so-called the only ones responsible? Or how can you be frustrated or angry when we know there's an example of a Chinese man who was absolutely brave and responsible, stood up to a very scary government, and he paid the price for it. And then even more, this man has passed away. This man is a type of a hero. Right, and he's Chinese. Did the government try to cover stuff up right away? The Chinese government? Yes. Have you ever heard of any government ever covering stuff up? Have you ever heard of the CIA? Okay, I'm not mad at us for having a CIA. I understand why we have to have a CIA. I understand why we have cover-ups, and I wish we never had one. I'm not saying sure, yeah, cover it up. I don't have a problem. But what I am acknowledging and embracing is the reality that this universe has what scientists call entropy, what we humans may call suffering, and it inflicts on us pressures, pains, fears. That's what this universe is, and it inflicts on us even us not meeting perhaps our best ideals, and it inflicts on us sitting around and judging others. But sometimes we don't judge them as we judge them far more harshly than we judge ourselves, don't we? It's like this. I'll just bring this in. If you know me, you know I love this. When we're playing, we've got energy to no end. You get us dancing and playing music, 4 o'clock in the morning, I'm still rolling. I'm doing good. You get us working, and by 7 or 8 o'clock in the evening, we're passing out. Why is that? Why is that? Because we're only human, and we're not perfect. We're not robots. We're not gods. We have limitations. Okay? China does. America does. Everybody does. We're in this thing together. There are some benefits we're going to get. Governor Andrew Cuomo spoke about them. I'm proud of him. I've spoken about them in the past. I didn't put up a slide for benefits we're going to get, but we will get benefits from all our challenges. This will be a tremendously painful workout for this species, but when we come out of this workout, we will be more fit than we were coming in. I have no doubt of that, because this flu, by the way, may be the best preparation for that next one that might be much worse than this one. Who knows what's coming next? All right. Anyway, so what are great knowledge areas for investors? And they do. Skillful investors are great at all this. When you jump into an investment bank, and when you're in an investment banking interview, this is the stuff they're curious about. If they want to know that they want to know if you know. Do you know your history? Do you know geography? Do you know who runs the governments around the world? Do you know what governments have, what we call royalty, still have aristocracy? Or do you know the recent history of what's been going on in, say, India or in, pick a country, right? Malaysia. Can you mark out a few of the countries in Africa? If you can't, that's okay, but please do, because this will make you a better investor. Not to mention, it'll make you more interesting to speak to. All right, news. Our lives pull us away from keeping track of the news, and here's one important reason: is the quality of the news is so low in general on U.S. TV. I can't speak for the rest of the world, but in the U.S. we have news stations. This was not the way it was in the past. We have news stations that are clearly, strongly biased in favor of the liberal side of democracy. Mainly these are CNN and MSNBC. These are very well known. And on the conservative side, we have Fox, and they don't have much common ground. If you watch Fox, you won't hear them criticize Trump almost at all. They'll criticize him very little, and then they'll destroy any Democrat they get their hands on. And then the CNN does it as well. There's no balance there. So people have quit watching. Do you know that ratings have been falling in general for the news? Although Fox is the leader in viewership. You may know MSNBC and CNBC. Careful. MSNBC and CNN together, I think, are roughly comparable to Fox. So it's kind of even. Anyway, all right. So knowledge areas, keep up with what's going on in the world. And in the past, I can tell you, my dad and their generation, they read that newspaper every single day. It came to our doorstep, and he spent time every day going through that thing. And my dad knew what was going on. And the average person nowadays in the U.S., my impression, is far less informed of current events. The internet has given us immensely more varied and deep knowledge of many more topics than the prior generations had. There's no comparison. But in terms of just knowing what's going on politically, day to day, that I feel has diminished, especially if you were going to ask me, what is our level of knowledge politically day to day on an unbiased basis and with some depth and some breadth and some ability to consume news and analyze the news intelligently. I hear people speak about the news often, and it's clear they don't even watch the news much. They don't know the topics with much depth. But this is our chance to start paying attention, to start learning, so we can be not just better investors. If you're a better investor, you're a better parent, you're a better brother, sister, friend, girlfriend, boyfriend, gender friend, call it what you want. Okay. Pay attention to economics. Who cares what GDP is, right? Well, now you'll care, because this is very critical in the ability to battle coronavirus. Countries with stronger GDP are well armed, much better armed to fight this battle and to help the other countries that don't have this equipment, right? Have you never helped somebody who has less equipment than you? Have you never done a favor? Have you never helped an old lady cross the street? Have you never helped anybody? How did you feel when you helped anybody? So as a country, how are we going to feel when we help other countries? I hope you'll feel as great as I will feel. I am proud of any country helping any other country. I'm certainly proud of America and how it's helped other countries. And no, I'm not proud of how America has done stuff to damage other countries, because it has done that. But by and large, most of the time, most humans get it right. That's why there are over 7 billion of us alive. There could not be 8 billion of us alive if we were mostly bad. Don't believe all that bad stuff on the news is all there is. Well, they have a news show on people are graduating from college. They're the first in their generation, first in their town, et cetera, et cetera. All kinds of great things are happening just right in front of us and right around us every day. Look around you. Is your neighborhood literally on fire? No. There's a coronavirus, and things are different right now. But it's not on fire, all right? Although my heart goes out to us, because this is a unique time. It's quiet on the streets. Here in Carlsbad, it's quiet. All right, economics then, of course, right? That makes sense. Investing, economics, they go together. All right. Why do you care about U.S. Treasury and corporate bond interest rates? Because those are the interest rates, and those are the interest rates that mortgage rates are based on, credit card rates are based on, equity loans are based on. So caring about interest rates, probably before never in your life did you care. Well, guess what? If we get too in debt as a country, interest rates will skyrocket. It'll be very hard to buy a home. It'll be hard to get a business loan. Interest rates are critical for business, because businesses take that 5%, 10% loan, they make 20% on it, and that's their profit. That's called investing capital and getting return on capital. Fundamentally, that's all a business is. Take capital, invest it, and make money on top of what you pay when you pay back on the capital. That's return on capital. Learn what investment types are and learn who the service providers are. Do you know what a broker does? Do you know what an investment manager does? Do you know what a hedge fund does? Learn this. Watch my show. You'll learn it. Learn about markets. Learn how stocks and bonds and energy prices and commodities and metals are behaving. Start paying attention to that stuff, and little by little, it'll start being easy. You know hundreds of people's names, 1,000 people's names, 5,000 people's names. You can know 100 prices. You can know the prices of 50 or 100 stocks. You can know these interest rates. You can know who runs what company. You can learn this stuff without even trying very hard. You know baseball players' batting averages. You're a human being. You're the greatest thing. You are amazing. You walk and you talk and you put your shoes on in the morning and fix your bed. You can do this. All right. Industries, right? Learn about different industries because it's fascinating, particularly the new industries that crop up when we see young people coming up with these amazing ideas. Isn't that encouraging? Doesn't that give you hope? Accounting has got to be one of the more boring topics, but yet a little bit of the most basic accounting and financial reporting knowledge is extraordinarily important as an investor. And here's what I recommend that you learn. Look these up, come back and replay this part. When you watch this show again, come back, rewind, listen to these words. Learn what is an asset, what is a liability, what is net worth, what is an income statement, what is a balance sheet, what is revenue, what are costs, what is operating income, what is income before tax, what is net income, what are earnings per share, and learn what is cash flow. Each of those words I said, learn the definition of those words, and you will have 75% of the accounting knowledge that you need to go into the annual report of any company and see how they're doing and compare them to each other and see whether they're improving or getting worse, so that you don't have to rely on some broker that you call on the phone to tell you how some company is doing. You go on the internet, you type their name and type income statement, and it will pop up in front of you. This is where we are nowadays. This information is literally at our fingertips. We used to say that before figuratively. Now this is literally true. So go for it. All right, you heard the words I said, and I'll put them on a show. I didn't put them on a slide today. Financial reporting and accounting is the same thing. The accountants create the financial reports. What are the financial reports? The numbers that track how a business is doing. What are the numbers? Each and one of those things that I named a moment ago. Learn about what governments spend and how much they borrow. Particularly today, we're going to focus on the U.S. We're not going to cover all this stuff in all these slides, but some of these topics are right in today's show. What happens when you start becoming a knowledgeable investor? You really pay attention to science. I mean, really like get in depth into it a little bit. Did you know now that what we learn about what's going on inside the atom is also educating us about what goes on the edges of the universe and in black holes? That didn't happen before. Einstein wanted a unified theory, and now they're getting there. They're getting closer and closer. And it's astonishing what scientists are discovering about what we can know and what we maybe can never know, but we can guess at. It's a beautiful story that we're learning. And when I was in high school, I thought, man, we're near the top. We know just about everything. We sent a man to the moon and we have an atomic bomb. That was the beginning. Knowledge is exploding right now. Scientific knowledge, biological knowledge. Go on the internet. We now know how the little machines work that replicate our genes. Did you know that the gene chain is only a few atoms wide? I didn't know that. It's only like 20 or 30 carbon atoms wide, this thing. I didn't realize DNA was that little. Did you know that my DNA in all the cells of my body could stretch to the sun, wrap around it, and come back a few times? Because every cell in my body has an unbelievable amount of DNA in it. It's being replicated right now, incredibly fast. Unbelievable. So yeah, learn about the environment. Learn about medicine. Learn about regulation and taxes a little bit. Learn who is who in this world, right? Do you know who runs anything? Do you know who runs businesses and who founded Facebook? Huh? Do you know who Zuckerberg is? Okay. Learn some business history. Business history, that's probably an expression you never heard. Look it up. It's at your fingertips now. Go on Wikipedia. All right. Learn about universities. Yeah. Where was the first university? What's the oldest school? Why do they matter? Right? Well, you may want your kids to go to one. All right, here we go. Historical crisis perspective. So we're talking about knowledge right now in all these areas, right? Here we go. Knowledge, but here comes some knowledge. I better slow down a tad. Knowledge plus diligence equals prosperity. Be more alpha motto. Here is some knowledge for us. All right. Relevant, pertinent knowledge right now. A historical crisis perspective. This is a table I put on Facebook. I updated it for today. World wars, epidemics, pandemics, and plagues since 429 BC. There might be other items. I may not have everything here. I created this. and it may have some slight errors. I found typos. I found 8 different typos pointed out to me. People pointed out to me, and I had to delete it and put it back up on Facebook. Today's is probably the most accurate one I put up. All right. So we're not going to go through every one of these, but I'm going to go through key highlights. I've got some key points that I take away from this table. You can come back and look at it in detail by just pausing here. Coronavirus acceleration suggests it could compare with past crises. It's growing very fast. These last couple of days, it has sped up around the world, though it's slowed down in China, which is good news. All right. So coronavirus is the bottom line on this table. But let's notice something. Let's look at our list of items that we have. I'm going to fly through these. We have plagues, smallpox. We have influenza. We have world wars, salmonella, AIDS, encephalitis, and typhus, right? So that's the stuff we have, and we have coronavirus, okay? Different time periods, again, starting from 429, and I put the world population in there so we could see how many people died versus how many people were alive. So that takes us to mortality, to me the most important column in here. So the top one, the Black Plague, was the most devastating crisis mankind has faced. 1 in 6 humans on planet Earth, as far as we can tell, died. All right. It lasted 22 years and 9 million people died per year. In the 1330 to 1353 period, 22 years of this, right? Entire lifetimes for people at that time, because people lived 30 years then, if they were lucky. Not during this crisis. Their lifespan actually dropped. It's one of the times in history when you look at lifespans where the chart drops and then it recovers very slowly. Okay, so all right. So then let's go down. Let's not worry too much about detail, but let's go down and see that crisis number 1, the Black Plague, killed 1 in 6 humans, and then there was smallpox, killed 1 in 10 at one point. Go down. So right now, as of today, coronavirus at the bottom of the table has only killed 1.5 million humans. All right, but that's so scary to me. That feels like a lot of humans, right? 16,000 deaths. That's scary. It has lasted less than a half year. I gave it a half year. So at this rate, it would be killing 32,000 people a year. 16,000 deaths in a half year is 32,000 a year. The other events on this table, however, right, were far worse than coronavirus to now. So it has the potential to vastly increase. If we were at a new point that we'd never been before, we might think, well, it can't get worse. This has never happened before. But we've seen that it can get worse. So this table serves as a warning. Someone saw this table and got very angry at me when I first put it up, and I totally don't blame them, because they thought I was trying to suggest that coronavirus isn't scary. I was going the other way with this thing. My whole point was, except I failed to say it when I posted it, my whole point was grab onto your chair, right? Because this thing is speeding up, and if it keeps speeding up, who knows how bad it could get, all right? But this also is opportunity. This says we can cut this thing off, and if we look back and we end up at only 1.5 million humans, and we locked it down where it is right now, then we could look back at these other emergencies and say, you know what, we're doing okay. So I am so hopeful we can curb it. And I call on all of us to support the effort to curb it. We know what that is. Be so careful with not being around people. Follow the rules about not going out in public. Wash your hands a lot. Take a lot of baths, hot baths. Clean your house to death. Clean your car to death. And when you come in from outside, come in with wipes from your car. Wipe your doorknobs. Go nuts. Become a clean freak. Okay? I've been called a neat Nick and a clean Nick. So I'm already been contaminated with that. But join the team. There are lots of us out there like that. And it feels great. It feels great to do all this stuff and then look back and go, wow, I'm keeping things neat and organized. And we know this too. If we keep up with it, it's less work, actually, not more work. So here we go. It's actually efficient when you keep up with stuff. You just got to get used to doing it. Here we go. Coronavirus growth implications. So let me remind us, I'm going back to my roadmap. We're on coronavirus update. So here are coronavirus growth implications for the world. This is it. This is terrifying because this blue and yellow line are not starting to slow down their rate of increase. They're accelerating. They're becoming more steep. All right. 373,000 cases around the world and 16,000 deaths as of 12:30 today when I created this. That's an 11% increase since yesterday. And if this rate continues until April 9, 11% increase per day, and I hope it doesn't increase, the rate doesn't increase, that's 100,000 deaths by April 9. If I did the math right, I do make math mistakes. That's a challenge for me. I triple check my numbers, but I will check them again. I've done this in prior shows, and I've corrected myself in subsequent shows because I've made mistakes. But I think I did the math right. I was very careful because this is so serious that this time I was extra careful. I did not want to mess this up. And for an MBA like me, this is very basic math, because what you do all day long is you measure the growth of the prices of securities. So it's an easy formula. Anyway, so here we go. If we increase by 11% a day by April 9, right? Today is the 23rd of March. Did I remember that right? So that's only a couple of weeks away. United States of America, different chart, same idea. Increasing, okay? Cases are increasing. I didn't put the deaths chart. We see the cases increasing. That's, again, as of today, 12:30. Total cases so far, 43,000. Total deaths so far, 500. 85 deaths in the past 24 hours. That was a 20% increase for the United States, while the world would increase at a rate of 11%. So I'm going to repeat that. Our increase is 20%, nearly twice the increase so far. And one reason is we were behind on measuring it because we didn't have testing. Part of that won't be because we really are becoming more infected faster. Part of that will be just the way the numbers are being tallied. And part of it will be because we aren't being as careful as maybe we could be. No, I don't have to say maybe we could be. We know that we could be more careful than we are being. It's just like knowing that you can do more than you've done in anything. So by April 29, the United States by itself could have 100,000 deaths in over a month, just over a month and a week. $100,000 deaths. I don't remember the numbers now, and I wish I'd put this up. But in all our wars, we've lost several million people. I don't want to see us lose people on that scale, right? From this in our country, and I don't want to see it happening around the world. Origin and accountability. I've seen people talking about the fact that China is responsible. I do agree that that I don't feel offended if somebody calls it a Wuhan virus or a Chinese virus, because if it had started in Chicago and they called it a Chicago virus, I would think that helps, because that helps identify which virus it is and where it started, and it helps us, right, to, like memory trick, to give a place and time to things, and I don't see it as racist. If people do feel that way, though, they feel it's xenophobic and it's racist, I understand. I don't judge that. I'm not frustrated by that. If you feel I'm being racist and xenophobic, just because I don't react as strongly as you to it, you've judged me, that is your call. But I don't judge you. I can tell you that right now. Regardless of what you have done in your life, what your perspective may be, you could be sitting in a prison. You could be on death row. I have no qualms. Okay, we are all in this thing together. We all just got thrown in, and all the great things that happened to some of us that we think we did, we just got lucky. And all those tough, rough things that we do that we regret, we just are human. We're just machines, these human creatures, souls, whatever we are. I judge none of us. Right? You want to judge me? I don't have a problem with that, because I'm not even offended, because that's what we are. We're human. And I don't think even that you're necessarily wrong. I'm not sure I'm right about a thing. Nothing. I go on probabilities. All right. So here we go. Coronavirus did originate in Wuhan, China. Okay. And initially they quashed it. And by the way, you know this, right? That it's what they call a wet market. It came from maybe bats. So some animals, and particularly bats, I'm learning, because we're learning. See how you start learning stuff when you're an investor? Bats are very contagious. They carry quite a few diseases. I did not know this, that they eat bats in China. But hey, we eat chickens, and to some people, they don't eat beef. We eat beef. I don't judge that. So here we go. Coronavirus. Oh, clearly I have a typo in here. Here, want to fix our typo? Why not? Heck, let's watch this machine go. Let's see here. Let's get this thing going. I just hope it works again. Okay, good. Coronavirus is growth is slowing in China, and I give them a C. Maybe I might give them a tougher grade if I were such a nice soft grader. Maybe I'd give them a D or an F. But why am I saying C? Because here's something interesting. I am absolutely for freedom. I don't at all support governments that can control you and tell you, you got to stay indoors, and you just do it. But in this example, here's an example where a strongly authoritarian government was able to quash something more quickly than maybe we'll be able to do in any other environment. So what normally I would see as a vulnerability, in this case, this is a great lesson for all of us. There is a strength also in having a very highly autocratic leadership, or at least highly influential leadership. Now, unfortunately, maybe I shouldn't be laughing, because I think in China, people fear their government. In fact, there's no question. Watch a movie called American Factory. It won the Academy Award for Best Documentary this year, and it came out last year. American Factory. I might have the wrong title. But in this movie, you have Chinese employees who come to work here, and the Chinese gentleman who gives them orientation tells them, please believe me when I tell you that in America, you get to actually say what you think. And in America, please believe me when I tell you, you can even make fun of the president, and no one will care. No one will hurt you or bother you. You won't get in any trouble. And you could see in this group who were watching him, by their body language, that sounded impossible to them. Okay? I share that story, that anecdote, to help us appreciate, first of all, how fortunate we are to be free. As free as we are in America, at least, and as free as we are in most Western countries and in many countries. And it does increase by leaps and bounds, and it's a roller coaster. But mostly we become more free. Anyway, here we go. Now it's the U.S.'s turn for a greater accountability. Our preparedness advisor in 2018 told Trump that a flu pandemic was our number one security risk. And I believe I think the military also shared that with Trump. I heard that reported. A month later, Trump's team removed some biodefense leadership, a team, I guess they had, an organization. I don't know a ton about this story, but they call it a streamlining move. And I think Bolton was he was a national security advisor, head of the NSC. And I think he led that change. And it's interesting because Bolton is a guy, if you watch the news, who's out there, who's written a book that may shed light on Trump, the stuff he got impeached for, So Trump's trying to either block the book or not let parts of it get published. So he's at war with Trump. At the same time, Bolton did some things that don't make Democrats happy. He's a Republican, and he's a kind of a hardliner, and he's tough on things, some of them which I agree with, some of which I don't. Okay, Trump at first, we know he at first minimized corona risk. We all watched. Well, many of us watched it on the news. Okay, and other levels of the government have taken action. And there's been this kind of void, this vacuum, leadership vacuum. But now Trump and his team we see it every day. They're on every day, and they're getting in action, and they're doing things. Trump's got some medical boats, right? I think they're Red Cross boats going to help on the coasts, and there are many other examples. I won't remember the details, and that is good. Every single thing that our administration does to help is a help, and I'm grateful to them. Do I wish they did a better job? Of course. I wish I did a better job. I wish I could teach you more in this little show here that I'm going to be able to teach. So I'm going to give the Trump team a C. Also so far. Why? Because they're human. Who are the Chinese, and who is Trump, and who are we? Why are they getting average grades for humans? Because we're human. I won't be surprised if I look back someday and go, yeah, give us a C for being human now. But I'm going to remind us of something. As far as I'm concerned, as a species, we get AAA, triple plus. I'm giving these grades today of a C in the context of being human. However, we're perfect. We're the greatest thing. The most humble among us, and the most arrogant, wealthy among us, the most selfish among us. We are all great for me. I'm with you all the way. Come and hang out with me anytime. And I'm ready. I'm ready to party with anybody. All right. If coronavirus becomes biblical, okay, who's accountable then? We all are. I love this story. I made this one up. Dumb story, but I believe it is profound. If you see an anthill in the middle of the road and it gets crushed by a truck driving by, have you ever once thought, those ants are stupid? Look, they put their anthill in the middle of the road instead of putting it in the grass or on the curb or on the sidewalk or somewhere safer. Would that occur to you? Would a super alien ever come and see and watch us maybe fail? Maybe come back and find the earth after dystopia, after it ends, and come and judge us because it ended, because we didn't survive ourselves? No. You know what they'd say? I believe they say that's what they are. That's what humans are. They were great. Look at these guys. Whoa, there's some spaceships they sent out that are still out there flying around, in space. They landed on the moon. They blew up some atomic bombs. They learned relativity. Yeah, so they were very smart. They accomplished a lot. When you watch little ants creating a little anthill, are you not fascinated by their cooperation with each other? Their strength, this little tiny ant carrying this big heavy leaf. I can't do that. I'd have to carry a truck to carry what an ant carries, right? So we're all going to be accountable for if coronavirus takes us, or however we may fail, unless it's an asteroid, etc. Okay, and what's wrong with that? Accountability to me is a beautiful thing, because then you really own it. When you love yourself, including what you mess up, now you love yourself. If you don't love yourself, including what you mess up, I encourage you to go ahead and own it and tell yourself, okay, I'm giving you a break. You don't do everything perfectly, and I'm here to give you a break. I'm with you, and I will never, never not be with you. Tell yourself in the mirror over and over if you have to, and it will work. In every case and outcome, we humans are the greatest species in the universe, and I believe in the universe. I strongly doubt that there are actually other intelligent species like us. The probabilities feel preposterous to me, even though, of course, scientists theorize that there could be an infinite number of universes, so it's inevitable there have to be other species. I'm on the side of it feels impossible to me that a planet will tilt the way the Earth is so we can have seasons, so we can plant crops, that will have a magnetic field that will block radiation, that will have water that's not too hot and not too cold so that it flows, on and on and on and on. I can't imagine it. Do I believe there are viruses in maybe not, because viruses rely on other DNA or RNA. I'm learning to survive, but maybe there are other viruses or bacteria in the universe, and that's going to be it, or some form of life that we might not call life, because viruses aren't quite life. They can't reproduce without invading something else. They can't reproduce on their own. So they're semi-life. It's fascinating what they are. But they are some monstrous little machines, aren't they? But don't forget also many viruses that are in the air and in our bodies that we need, and bacteria as well. So there are those that harm us and those that help us. Okay, coronavirus update done. Market update. Here we go. S&P 500, Black Monday, October 1987. I didn't put the Great Depression in here. Why? Because this chart would just get too long. It wouldn't look good. So I don't remember right now how much the market crashed, but it crashed along the lines of the worst crashes that we're going to look at here today. Be satisfied of that. So Black Monday, okay, here we go. There were merger tax breaks that were being used that were driving a lot of mergers, and that was driving out the market. And then the trade deficit exploded in the U.S., and that created a panic. That's the best explanation we have. So in one day, the market dropped 21%, and that has never happened before or since. So for a 21% drop, that's the greatest drop. Recently, markets had their highest point drop, but as a percentage of the total value of the market, that's still the biggest drop in history. Okay, back in, again, 87. From March 24, 2000, when we were at a peak then, down to October 9, 2002, the market fell 49% when the internet stock bubble burst. And due to the financial crisis of 2007, 2008, and that was because of low-quality mortgage failures and all kinds of other multipliers, things that were being done by corporate banks and by Wall Street that made it worse. Then the market fell 57% during this period. And what is that period? It's from October 07. Then if I go to October 08, that's a year. And if I go to March 09, that's November, December, January, that's 6 months. So 2.5 years. 57% drop over 2.5 years. Brutal. And the coronavirus, in only a short time, that is a record. Okay, so that I think I'm clear on that. In this period of a month and 4 days, the market has never fallen 34% as it has at this point, this very moment today. So pre-coronavirus S&P was at a record high. And the price earnings ratio was 25%. Here's what it is. I've done entire shows on this ratio. Here's less than a minute on the ratio. The price earnings ratio is the price of the average stock on the S&P 500 divided by the average amount that that stock earned in a year. And the average of that ratio is 17, but we were at 25 pre-coronavirus. We were at all-time highs on February 19, 2020. That was the all-time high close right here in front of us at the highest point on that chart. Okay. And the ratio was at 25 times. And I did a whole show showing that if it fell down like 20%, we would lose many trillions of dollars, and it happened. So that was a month ago. It made me look like a genius, but it was just a coincidence. I got into this whole game because now you can get on, you can join the investment revolution because you can get an online investing account with zero minimum balance and zero commissions. I'll have more on that. So when I saw that, I started this show, and all of a sudden the coronavirus emergency came out and made this show vastly more relevant for all of us. More relevant for me to get back into paying attention to markets, and even in investing. I've become a more active investor now again, and more. And I've decided that I'm going to get on this mission, get people aware of investing, but get people aware of what's going on in this world, not just with coronavirus, but as much as I can in general. Because by the time you've become an investment banker and been at it for 25 years, you know a few things about history, etc. Why not share that stuff, including with my own children, my family? I hope you'll watch, my grandchildren, the rest of you. So the average price earnings ratio was 17 times. So we've only been over 25 times. 8 out of 100 years at year end. So, and I think it was a little more than 100. Oh, no, that's right. The ratio was 8 out of 100 years. 25 is not sustainable, but then coronavirus toppled an already teetering market. And for years, this market rallied since 09. It's been like never before in history. And people were frequently on the news, candidly sharing that, hey, it's got to fall, it's got to fall. Remember this, though, people who are on the news and people who talk to you about your portfolio have to almost always say it's going to be okay. Because if they say it's going to be bad, they could cause it to be bad. They could cause it to be worse. So don't be judgmental of the fact that people who cover business news and people who talk to you about investing bias their commentary in a very positive way. They make their living at it, and they don't want to be the reason that things get worse. So it's an understandable perspective. It's like not giving a kid bad news, right? A young child that doesn't need to know bad news. Do you necessarily give them tough news nakedly, or do you protect them a little bit from their own fears? Investing implications. If you're a risk neutral investor, sell some or a lot of stocks, sell long-term bonds, sell riskier bonds, buy short-term bonds, or short-term stuff like certificates of deposit. And if you're a risk averse investor in a situation like this, sell all your stocks and bonds. Now somebody's gonna say, oh no, you're selling low. Guess what? Look at this market. It's been lower. It has fallen more than 35-4% in the past. Our multiple, I remind you now. Oh, I didn't give it today's multiple. Today's multiple, I'm gonna guess, is around 17 times, around the average. Last time I checked, it was 18 times, and we've gone down. So I'll update that next slide. But now in other words, the point is this: is now the market is at a level that corresponds to where earnings were for the last year. All right. It's not like it's at a level that's way, way low. Not at all. It is at a reasonable level. I'm going to repeat that. Considering where earnings were, what companies have earned in the past year. So if we are facing recession and depression, then it would make simple sense. The market will continue to fall from this normal level for normal healthy economy to levels that will represent how it will be when the economy is weakening. So, okay, you get that. So yes, it can fall more. That's what I want you to get from this. And there's our market update. Okay, right? Lots of huge numbers. Did I have any huge numbers there? Yes, look how huge the market moved, right? By the way, this whole market, when we were at the top, you know what it was worth? $40 trillion. You know what it means to take away a third of $40 trillion? That's $13 trillion, if I'm doing my math right. 13 times 3 is 39, 40. I did it right. We've lost $13 trillion. Remember, 1 trillion is $3 per person. Right? No, 1 billion. 1 trillion is 3,000 per person. So 13 trillion is 13 times 3 is 40,000. $40,000 per person. Now, of course, check my math, because me doing math in my head is a risky thing, but I make myself do it as an exercise. But my rough number is 40,000 per person was lost. Per person who lives in the United States was lost in the U.S. stock market. Okay, our market update is done. We're going to go through investment types. I'm going to fly through these because I've already done them on other shows. We're going on an hour here. Okay, let's look first at what they are and how risky they are. On the left, I'm going to fly through these. Okay, before I even put the list in, notice there's fixed income. Look at that, the names on the left bar. They're sideways. There's fixed income, equity. I'll explain what these are. Stocks and bonds. Stocks, bonds, shorts, and derivatives. You'll get why that's that way. And derivatives. Okay, I'll explain what that is. So what's our instrument? When we buy cash, cash is cash. What's the risk of cash? Look way over on the other side. 0. You don't have a risk of losing anything. You really do lose inflation when you're on pure cash. If you're in pure cash and you don't invest it at all, you're losing whatever the inflation rate is every year in purchasing power. But you're at 0 risk of losing any more than that. And what's your average return? Okay, here we go. This gets fun. Cash 0 to 2%, depending on what you do. Let it lie there or buy a certificate of deposit. You can make over 1.5% right now. Certificate of deposit. Okay, bonds are, you buy a bond, you're buying a security that someone issued, and it's a loan. When they issued it, they promised to pay it back, and they do, and it pays interest. What do they pay? They pay 2 to 7% per year. Individual stocks, the range of earnings are huge. Look at the range, negative 30 to plus 50% a year. And an individual stock, not a diversified portfolio. Okay. And the risk is an 8 out of 10. Then this risk meter is what I made up just for this slide. That's it. Okay. So yeah, on this slide, stocks, individual stocks. If you think you're a stock picker and you found a great stock, it's a penny stock, and it's going to make a lot of money, careful, you hang on to your seat because it could drop 30% a year, no problem. In fact, 2/3 of the time it will be between negative 30 and plus 50% a year. Okay, 2/3 of the time. 1 out of 6 times it'll be below that. 1 out of 6 times it'll be above that. That's called volatility. I'm not going to teach volatility again. I taught it in prior shows. So watch my prior shows. Okay, and they say underneath what I cover, so you can see what I covered. All right, and it says on the roadmap what I covered. Okay, so then mutual fund shares buy stocks and bonds. They buy blends of stocks and bonds, and they diversify you. So now look what the return is. The average return is similar to individual stocks, but or maybe a little less because it includes bonds, and bonds earn less than stocks. However, look at the range. The range is much more narrow. Instead of it ranging from negative 30 to plus 50, the range is negative 5 to 25. What does that mean? That's called volatility. And what does that mean? Again, 2 out of 3 times you will be between negative 5 and 25% earnings. Okay, and it's called return. 1 out of 6 times you'll be below negative 5. 1 out of 6 times you'll be above 25%. And your risk level, I call it a 4. Exchange traded fund shares are like mutual fund shares. They're modern. They're probably better to invest in. You're probably going to save about 1% a year getting ETF shares, and they're becoming more popular every day. So they're like mutual funds, and they have the same risk and the same sort of return. Maybe they deserve for me to throw an extra percent in there. Maybe I should put 6 to 26% in there because you can make a little more. All right. What's a hedge fund? A hedge fund is an investment manager. Let me do this. A hedge fund is an investment manager who you hand them your money. If you're an accredited investor, means you're wealthy, and they perform the fanciest, most aggressive, most high-speed trading there is in the universe. They are the smartest people in the world. Typically, the guy who starts a hedge fund is an ex-investment banking trader who was a genius, who literally made tens of millions, hundreds of millions of dollars for his investment bank, and literally did not like his $20 million bonus. I am not making this up. And he goes, "You're only giving me a $20 million bonus when I made you $100 million. I'm starting my own hedge fund. I'm going to make $100 million on my own because they are that skillful." So if you can hand a good hedge fund your money, if you are wealthy, look at it. But do your research. Don't just do it because I said so. And nowhere near are all hedge funds equal. They vary. And if you looked at the 1,000 hedge funds that are out there, on average, they're not that good. But if you look at the top hedge funds, they are good to great. They don't always beat the market, by the way. But something consistently that they do is that they have less risk and more return. They have alpha. And many of the hedge funds' names are alpha, or the strategies have the name alpha in the strategy. Look it up. You'll see the word alpha more than you ever saw it in your life. You may get tired of the word alpha because alpha is so important in investing. And that's why this is the Get MorAlpha show. And you are getting more alpha by just watching this darn show. Okay. So alternative ETF shares. Yeah, how much back to hedge fund. High potential earnings, risk is 3 to 5. Now, alternative ETF shares are ETF shares, but that do what hedge funds do. Not everything, but a lot of what they do. And they're out on the market now. And I'm still just learning about these guys. They're relatively new. But I've been retired for 7-8 years. I've not been paying attention. Now I'm going to do a bunch of research and do a show on alternative ETF shares that look like a fantastic investment opportunity to take relatively less risk, but make alpha. Okay, maybe they can do it. It's hard to do year after year, but hedge funds have done it. Alternative ETFs may be able to do it. That would be amazing, because then mom and pop, you could go and open an account with $1,000 and start making the kinds of returns that people only used to make if they were very wealthy, or if they were hedge fund traders. Now maybe you'll be able to make returns like that. Wouldn't that be amazing? One of the reasons I'm teaching this. Okay, there are more reasons. I'm going to get into them. What is an option? The right to buy or sell something in the future. Okay. Now that means if you buy a call option, you have the right to buy something, and if you have a put option, you have the right to sell something. There's no such thing as an option that gives you both the right to buy and to sell. There's no point in that. That's just called a futures contract. Okay, and that's what the next thing is. Options can be very risky, 7 to 10. Futures, risk is 10, because if you get into a futures market where you must buy or sell something in the future, if you buy an option, you spend $1 on an option, and if it goes your way, if prices go your way, then you'll make money. And if they go against you, all you lose is the $1 you spend on the option. Futures don't work that way. You can lose a lot of money in futures, or if you sell options. If you ever hear anybody talking to you about selling options on some show at night, okay, change the channel. Unless you know how to price options, unless you've taken an options course like in graduate school, somebody telling you to sell options, don't do it. All right. Unless you are a whiz. If you're a math whiz and you get a book and you learn how to buy and sell options, you teach yourself how to trade options, congratulations. You know, go start a show and teach people how to trade options, or trade options and make money. Okay, here's what I'm going to say about fees. The only thing I'm going to say, fees are very low nowadays, except that when you get into a mutual fund, you pay a little bit, 1 to 1.5%. And if you get into a hedge fund, these hedge funds make a ton of money, so they charge a ton of money. They charge 2% of whatever they're managing plus 20% of gains. That is humongous. And yet people give them their money. Why? Because they succeed. So here's a description that you can read later on your own. This describes what each of these are, if you don't know what they are. This tells you if they're perpetual, because some of them are perpetual, but like a bond is not perpetual. But yet if you buy a bond through a mutual fund, it is perpetual. Why? Because when mutual funds buy bonds, they replace them. Before a bond expires, they sell it, and then they replace it with another bond. So that kind of stuff is stuff that is very useful for you to learn, that you can learn on this slide. Okay? All right, we've done enough on that. So we've gone through investment types, and now we're going to get into return and risk. Okay? This is a whole show that I'm now summarizing. This was a whole show. Now I'm giving the whole thing away in this one slide. Okay? Here we go. Here's what it is. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 types of investments. We have U.S. Treasury bonds that the government issues. We have global hedge fund index. This is thousands of hedge funds. Oh, and I didn't write it in here, but this was based on a study that was done a few years ago. It's dated, but it's still extremely useful because it has a long old data in it. Okay. All right. Continuing. Global hedge fund index. Remember, I said hedge funds are places where you can hand somebody your money and they'll invest for you. But I have to remind you of this, though. Correction. I must let you know this. Many companies that don't take anyone's money and invest it call themselves hedge funds, just because it's somebody sitting literally in a chair in his basement and he's trading and he likes to call himself a hedge fund, or she likes to call herself a hedge fund just because it sounds prestigious. Now, some of these people are making millions of dollars a year trading. All right. So they are as skillful as any trader at a hedge fund. A few of them, not a lot of them. Anyway, okay, enough of that. But a global hedge fund index includes what I'll call legitimate hedge funds, and then possibly not so legitimate hedge funds, because that index, I'm aware, but I don't remember the exact numbers, includes hundreds, if not 1,000 operations that call themselves hedge funds. It's a huge number. Let's call it hundreds. Okay. Investment grade bond aggregate, that's just investment grade bonds are bonds issued by corporations, and an aggregate is just an index that tracks all of them together. Okay. So this shows how much money it made, and don't look at the numbers yet. Just look at the names. BB corporate bonds are riskier bonds. So investment grade bonds are less risky bonds. BB corporate bonds are right under the line that's called investment grade. So people call them junk bonds, and they call them high yield bonds, and they call them non-investment grade bonds. Okay. The average individual stock, we'll look at in a second. S&P 500 index contains the average individual stock, but it's the whole, all of the stocks put together in a portfolio. General Electric is GE. It's an individual company. Top 100 hedge funds are in here, and McDonald's. Now let's look at them. Here's what I've done. Let's look at this table. We're going to fly through this. The green bars get taller when you go from left to right. They show what you earn on average, what your return is on average in each of these over a long period. Some of these were like over 50 years, 60 years, 70 years. Some of them were over shorter periods, wherever I thought the data was applicable and relevant and not too crazy, because some periods in history are rather extreme and they could bias, they could skew. They could skew us and misinform us and mislead us about investing. They can make it either look way more profitable than it really is, or way less risky, etc. Other periods may make it look more risky than it really is. If you're paying attention and you're knowledgeable and you keep track of the world and track of your investments, it's not that risky. People who get really destroyed, that's a painful word, but it's happening. It happens to them because they really don't have the knowledge and experience, and they're not paying close attention. They're letting other people do their investing for them, and this is who gets harmed the most. Also, people who they just take money out of your account at work, and then you don't respond very well, and you don't reduce your contributions or sell your stocks that you had in your account at work. So it's wonderful that your work will match you when you buy their shares. All of that is fantastic, but be aware that there are. Learn what that really means to have your account at work. Take full advantage of it. Be knowledgeable enough to get out when it's time to escape. All right. Anyway, okay. Green bars get taller as we go to the right, and red bars represent risk. What is the risk? It's the average that a return of each of these investments differs from its average return. I've taught that in shows over and over again. So if on average some investment varies a lot from its average, it has a higher volatility, we call it. And it's in red to scare us, right? So green is money we make, it's money, and red is scary. Okay, so you get that. So then let's look at those red bars. Look at treasury bonds. They make 6% and they're not much risk, so they're great. They make less now because interest rates are so low. Now they make 2 or 3%. All right. Will they ever make 6% again? I don't think so. I think going forward they'll make 3%, 4% maybe. But that's historical average. But what we see is that the risk is extremely low, and that global hedge fund index wasn't very good. It makes the same as treasury bonds, and it has what? 3 times more risk, 11% risk. Investment grade bonds, on the other hand, make more than global hedge fund index and way less risk than hedge funds, way more risk than treasury bonds. But hey, you take more risk, well, twice as much risk, and you get some more return. So that feels reasonable, right? That's what you get paid for when you invest, for taking risk. Oh, what a slurpy monster I am. I'm a slurp monster. Quit it. Okay. BB corporate bond composite. I said those are non-investment grade bonds. They're very similar to investment grade bonds. They're issued by corporations. But now these are corporations that either issued the bonds right when they're on the edge and are not able to get a higher credit rating, or they were issued as investment grade bonds, but the company faces hard times, and then they get downgraded by rating agencies of grade bonds, and now their risk is higher and their return is higher. What happens is when they get downgraded, their price falls. Well, they're still going to pay the same interest. They're still going to pay you when they mature. But now that you bought them cheaper because the price fell, you get more yield. You get the same amount of interest that they were going to pay at a higher price, but you paid less for the bond than the original buyer of the bond. All right, that's if you're buying bonds out there that are not investment grade. All right, average individual stock, just don't do it. Basically, why? Because they earn 12%, which is good. But look at the amount of risk you take. 40%. Let me tell you what that means. That means 2 out of 3 years, your return is somewhere between negative. Let's see, 10 minus 40. Negative 30 and positive 40. I mean, that is a positive 50. That is a massive range. Do you want to live like that with your shares just moving up and down like that, like crazy, your children's future, etc., their college fund? So don't buy individual stocks unless you have $1 million portfolio and you spend $1,000 on an individual stock. Well, yeah, of course. Or $10,000 on an individual stock. Yeah, if you don't need it. Or 20 or 30 or 40. Yeah, you've got $1 million, right? So yeah, take a lot of risk if you want. But why would you do that when you can make 12% and buy the whole index by buying an ETF that tracks the index or buying a mutual fund that tracks the index? S&P 500 index right next door here makes 12% a year, only 16% volatility. All right. GE, not bad, made 13% return, better than the average stock, which is 12%. But look, you're taking a lot more risk, even with GE, 25% risk. Top 100 hedge funds made 14% risk, but look at their, 14% return, but look at their risk, only 15%. So even though they use derivatives like crazy, they do something called shorting, they take way more, they use far more volatile instruments, just like we use when we cook. We use fire, but they know how to use fire. And they take advantage of fire to cook, to kill germs. Why do we cook? So we can digest food without catching disease. So top 100 hedge fund analysis covers only 3 years, so it's not really highly reliable. Top 100 hedge fund analysis, yeah, that one we're looking at. So that can vary a lot. But all in all, I wasn't shocked at all that during that period where I was able to get some data, company by company. Three years of results for top 100 hedge funds actually included about 165 funds. And for 3 years, and I was able to really get some interesting information from that. Anyway, here's what they really made, though. What they really made and what their risk really was they made 18% and their risk was 19%. But clients only got 14% because of the fees you pay. And your risk was less because of the fees you pay. Believe it or not, when you pay more fees, that lowers your risk too. All right. But here's what the hedge fund guys made. They didn't make 18%. Think about it. Their investments made 18%, of which they charged you 4%. That's 20% of the gains is 4%. Okay. Don't worry if the numbers confused you. But here's what really happened. They made 18%, plus they made 4% that you paid them from the 18. You paid them 4%, so they made 22% is what they made. But they have more volatility because of that, the way that's structured. So their risk was 23% risk. All right, okay, if I did the math right, 4 plus 19 is 23, 4 plus 18 is 22, right? Right, check. All right, all systems go. So as returns rise, so does volatility. That seems fair. The 10-year Treasury bonds average 6%. We already said all this, but now they yield only 2%, so be aware of that. Aggregate investment-grade bonds outperform global hedge funds. Okay, let's look at that one. Oh, yeah, I already went through that. Investment-grade aggregate did better than hedge funds. Composite double B corporate bonds. They do very well compared with hedge funds, and they do very well compared with individual stocks. That's the thing I really want to point out. I'm glad I saw this. Compare double B corporate bonds, fourth from the left. Compare them to the average individual stock. Look at how much safer they are. Wow. And by the way, you can buy funds. If you want to buy those bonds, you can buy funds that buy those. High yield. They'll never call it a junk bond fund. They'll call it a high yield fund or a bond fund, or they'll call it a non-investment grade bond fund. But that even sounds negative. So they're just going to call it a high yield bond fund because high yield sounds good. Why wouldn't they? Wouldn't you? All right. I mean, do you give bad news to your parents, you kids out there? Do you soften it or do you give it to them? Yeah, Ma, I smoked 6 joints last night. No. Yeah, Ma, we did a little bit of partying. Yeah, I took a drag, but I'm good. I'm cool, Mom, you know. Right? Okay. Composite double B corporate bonds, the highest rated junk. Okay, I already said this one. Okay, what's the elephant in the room? I'm going to repeat it so you'll never forget it. Individual stock picking is very risky. By far more risky than any other strategy on here, okay? Now, there is something, by the way, I will say, though. Trading derivatives is way, way more risky than trading individual stocks. Trading derivatives, depending on how you're trading and what size you're trading, you can take 100 times. You could take 1,000 times more risk. My point being, you can put on a derivative position that is changing 10% per second, okay? Now, when you think about it, the average individual stock makes 12% a year, okay? You can get into a futures contract in a blink with very little margin, where your price, you're sitting at a screen staring at it, and it's going up 1,000, down 1,000, up 10,000, down 3,000 every second, and you got to hit the button and get out of that thing. So compared with that, average individual stocks are not risky. Okay, so that's to give you a flavor of what the world of derivatives can be, and the life of a derivatives trader can be challenging. And I did a lot. Most of my trading was derivatives, however, and it was currency derivatives. However, I was transacting and really not trading. I won't give myself exact credit for trading, because what I was doing was hedging. I was working for companies. that had an immense amount of currency risk because these were companies, some of the largest exporters in the world, including Ingram Micro, and what we were doing, and Beckman Coulter. Okay. And what we were doing was selling products all over the world. So you're receiving foreign currency from all over the world. Foreign currency changes value all day long, and sometimes they crash. So what you do is you trade for a massive amount of business. For your whole corporation, all you have to do is a few derivatives trades, an incredibly few, 10, 20, 40, 50 trades a week to cover a company that's doing billions and billions of dollars of business around the world. And one team of 2 or 3 people are protecting the profits of thousands of shareholders, hundreds of millions of share value protected by a small team of people using derivatives. That's what I did for a living. Most of my career was that. I did a lot of other neat stuff, but that is what I did. And isn't it neat that if you're learning what the show is about, you get to learn what in the world I did for a living. I can tell you most people that I meet, when I tell them I was an investment banker, they're not supposed to know. It's not their fault. They don't know what I did. And I'm not going to bore them to death telling them what I did. But what I did, in fact, was one of the most fascinating careers you could ever wish to have. And I'm thankful I had the experience, and I miss it. I miss it extremely. I miss it a lot, a lot. Anyway, I talked about GE doing well. Top 100, let me read what I've written here. Might as well use it since I wrote it. Top 100 hedge fund clients receive net return, which I showed. Again, they receive 14%. Top 100 hedge funds, the clients receive 14%. And that's what? Better than GE and McDonald's when you factor in risk, for sure. All right. However, there was something important here. In that study, a third of the top 100 would be gone the next year. So it moves around. And finally, McDonald's had more returns than GE, but it had more volatility than GE too. So hey, if you wanted more return, you had to pay the price. Again, but I'm warning you, don't just buy GE and McDonald's unless you want to take that much risk, because those are individual stocks. You can get almost the same return other ways and not take as much risk as you did even with GE and McDonald's. Now, did you know all this before? Did you know how much people make investing? Did you know that the average investment is about 12% buying stocks? By the way, if it weren't, the market would just collapse. If you ever thought, oh, I hear people say, well, the market's just to buy, what is it? It's a break even. There's an expression. It's what's it called? Let's see. For every dollar someone makes, someone else loses. And so it's break even. There's another expression. See, I don't remember. That is not true. If you tend to own investments and not be short, okay, so you own investments on average, and they make money on average, or the market would just simply not exist. It could not exist. Why would people put up stock markets? Why would companies issue stock? Why would anybody buy a stock if on average they made no money or lost money? That whole market exists because it makes money. Even if there weren't all the speculation and trading and shorting and derivatives, if there were only stocks that get sold once a month, if we had this very restrictive economy, you can only issue stock once a month, and for all of those investors, you can only buy stock once a month, and you can't sell the stock until, you can't speculate. You got to sell it after you've held it 5 years. Some restrictive market. Even then, it would make money because the corporations take this money and they make profits with it more than what it costs to pay stockholders their dividends, and more than what it costs to. Let me clarify that. Companies make more money than the dividends they pay out in profit because they reinvest a lot of the money to keep the company running. So they're doing a great thing. They're creating enough money not only to pay the owners profits, which is called dividends, they're creating enough money to keep themselves running, to keep their factories clean and keep their machinery running, right? That's a responsible company. That's what a profitable company does. And now I'm slightly lost. Okay. All right. So in short, markets make money. I'll go back and wish that I had not lost my train of thought. That's it. Return to risk. Okay. Gross domestic product per capita income. Why do I put this up? What is this GDP? It's how much money entire economies made. It's our chart. It's this thing on the left, this ball. That's GDP. That's our theme today. Huge numbers. Here they come. Here come some huge numbers. This is in 2018. Okay. I have sorted the top 48 countries in the world by how much they make, But I've also included how much each person earns for each country per capita. So per capita income is this: gross domestic product divided by population. So I have the population here. And you can do the math for every one of these. If you take gross domestic product, divide by how many people you have, that's how much each person makes on average in this country. So let's look at the numbers for the United States. We have 327.2 million people, and with 20.5 trillion dollars, we're talking huge numbers today. Largest economy in history. 20.5 trillion in 2018, made more in 2019. See, these are the hugest, humongous numbers you've done ever seen. So anyway, $20.5 trillion divided by 327 million people says $62.8 or $63,000 a year. Okay, that's per capita income. That's what each one of these numbers means on this table. We have this for each country. So who has the largest economy? The United States. Who's next? China. You're not surprised. $13 billion. Why would the world be letting them make all that money, by the way? Do we just give money away to people? You know, do you just walk around the sidewalk, just throw money at people? Do you drive down the street in your car, just throw money at people that you see because they look good, or because you just for? Why do they get money? Because they work for it, because they earn it. For centuries, the United States was the world's top net exporter, and the world bought our products. No complaints, right? Why? Because our products were better at a better price. So now, if we believe in free markets, which I absolutely think is religion for me, do you think that I could possibly ever complain when someone out trades me and out free markets me and I'm buying more of their stuff than they're buying of mine? If somebody does that, I could tip my cap, because beating America is a trick. That is something. And these people are doing it on a certain level, but then don't be deceived, because they're not really beating us. Don't forget this. It's not that I care. Whoever wins, wins. I'm not rooting for anybody. I love America because we have everybody here. I'm on everybody's team. All right. But if you care, and if you take it patriotically, personally somehow, don't you think the Chinese are beating us? Why not? Look at per capita income. Okay. They have what? 4 times as many people as us? 5 times almost? What is their per capita income compared to ours? 63,000 compared to 10,000. We earn more than 6 times on average what they earn. Okay, so don't ever sit around. For one, I recommend. Okay, don't complain about China handing us all these wonderful products at an incredible price because they gave us coronavirus. They didn't give it to us, right? No one in China said, "Hey, let's have coronavirus. Let's infect everybody. Maybe we'll have a higher per capita income." You think that they think they'll do better by giving us coronavirus when we're the ones buying more of their products than anybody else in the world? Please don't be naive. Okay, put that thinking cap on. All right, use it. Here we go. So Japan, amazing. Japan is the 3rd largest economy, that little island with 126 million people. And their per capita is not bad, 40,000. And that's it. I'm not going through any more detail. I'm going to go to the world on the bottom right. Okay, 7.5 billion humans that are included in this statistic. There's more, 7.8 billion, but many of them we don't have economic statistics. So those that are included here, 7.5 billion humans. 2019 was a little more, and $85 trillion produced in the world. Okay, per capita income of an average human being, bottom right number, $11,000 a year. So if you make more than $11,000 a year, you're above average. And if you make way more than that, you're way above average, right? And if you're in the United States, lots of you, if you're watching, make way more than that, right? Good for you. I'm happy for you. All right. So GDP is gross domestic product. All the products we make, all the profit that all the companies make plus all the income that all the individuals make. That is GDP. I'm going to say it one more time. All the profit that companies make and all the income that individuals make. Okay. It's not all the revenue that companies make, because then you'd be double, triple, quadruple counting, because they make revenue, but they pay costs and they're left with profit. That is income. Okay. All right. So anyway, GDP, I said it, is profits plus individual income. GDP is the most broad, most important measure in economics, right? And the top challenge for developing economy is GDP growth. G should not be capitalized in GDP growth. I can't resist. I'm fixing that. Here we go. I love this stuff. Okay. All right. The top challenge for a developing economy is GDP growth, just to get it cranked up. Because if you're a developing economy, you're a nascent economy in some part of the world where there isn't an economy. If somebody comes up to you and says, "Hey, congratulations, you could be an entrepreneur. We just changed the laws in this country, and that chief that used to tell you whatever you had to do, or your king that had to tell you what to do, or your grandpa, whatever, your system they're not there anymore. This is a democracy now. You get to vote, and you get to start put up a McDonald's. You get to do whatever you want. See you later. Bye." What are these people going to do? It doesn't do them any good to tell them they have a free market and they have an economy. It takes a blend of the right human capital, we call it, the right talent, the right wonderful, beautiful souls, combined with a free market system to make it all work. The free market doesn't make us succeed. It's we who make the free market succeed. Those of us who are entrepreneurial enough and responsible enough and have enough integrity. What do you do when no one's looking? Do you have integrity? If you got integrity, which we have a lot of, that's why this house around me doesn't collapse, because it was built with integrity. The road out there and the cars and this fan that's keeping me cool and this insane internet and this computer that's doing this magic right now in this camera, right? That's integrity. That's who we are most of the time. Productive people create successful free markets more than the other way around. Okay? So I don't only believe in free markets. In some environments, forget about a free market. It's better to just help people, to give them a kind of a structure that can just help them to the extent that they may wish to be helped, to the extent that it's humane, to the extent that it's practical, to the extent that it's gratifying for everybody. Let's help each other. Have you never had fun helping somebody in anything? Or is it not maybe possibly the most fun you ever had was helping somebody doing something? Could be, right? Here we go. Next, same data, okay? Same exact table, but now I sorted it by per capita income. Who makes the most money? Same exact data. Again, in the prior table, we start on the top left with the countries with the largest economy, most product. And you have fun looking at this sometime. Come back and look at this fascinating table. Now let's look at the same table sorted by per capita income. And Switzerland's on top. Why? Because they have great banking. So did I put some points in here? Per capita income is GDP per person. GDP over population is per capita income. I said that earlier. Look at Switzerland. Oh yeah, I had country by country commentary. They are into banking and they are educated. They're the refined middle of Europe, where people speak an average of 3.5 languages. I look it up, kid you not, and it could be more. I know persons from Switzerland. Through my career, I know people from all over this world, and I am only grateful. I'm not boasting. I am great. I'm lucky, is all it is. So here we go. Swiss knows several languages, typically 3 or 4 languages. German, English, French. Okay, so then they're into banking. Norway, I'm looking at the top guys here. Oil and gas exports. Ireland. You know what they did? They integrated Northern Ireland, which is part of the UK, and Ireland, and they managed to gain a lot of efficiencies. They've got some cool stuff going on. They have a lot of tourism. They have energy markets. They also have. They've also done a good job. Something else. You can put up corporate headquarters there. They become, there's a word for this, but a place where it's ideal to put up your corporate headquarters. If you're an American company and you want a headquarters that runs your whole European operation, Ireland's a great place to put that up. And we used to actually help people do that when I was in investment banking. The variety of services you can provide, to CEOs when you are an investment banker are remarkable, because you're learning what all these different companies are doing. So you teach one what the other one's doing. It's amazing what you learn. Singapore, highly educated population. There's a gentleman named Lee Kuan Yew. Look him up. Read what Singapore is. Size of Chicago, incredible country, amazing country. And look where they are. Great per capita income. And then us, we've got technology, energy services. We've got the internet, all things internet. Denmark, really highly educated. Denmark has the highest proportion of graduate degrees, I think, in the world. More PhDs and master's degrees than anyone in the world. They have a great energy economy. That's it. Let's talk about U.S. debt. I said we would. What are these two charts? Okay, on the left. Black line is total debt in the U.S. economy, total debt. And red line is, here, don't look at those letters yet because that's confusing. I got confused. Black debt is the total debt, but the red line is how much debt, this is confusing as heck. How much debt is really the net debt outstanding? That's the real relevant number. What it is there is a lot of debt outstanding, but that the government itself holds. Different parts of the government, like say the central bank or the treasury issues debt and then it buys back its own debt at certain times. And that's very good. It's all practical. You don't need to know why. It's all good. Government buys also a lot of municipal debt issued by other governments. Anyway, so the red amount of debt is debt that really is the net debt held by non-government lenders, because when you buy debt, you're lending to the government. So that is really how much money the government's really borrowing from people, the red lines. And so what's the big point here? Let's get some big points now. Here's our total debt, starting from 1940 to about now. And then here is our debt based compared with that GDP number. This is the huge numbers day, that big $20 trillion number. This is the debt divided by GDP. It's an important percentage, right? If it's at 100%, that means we borrowed as much as we make in a year. So if you make 100 grand a year and you borrowed $100,000, your debt to GDP number would be a 100%. Okay. All right. So let's look at total debt, top left, and it's been rising, hasn't it? And it peaked in the 40s, kind of fell, and then it went up, and look at it. It's been increasing. And what's our debt to GDP? Okay. So debt to GDP went way high in World War II. Red line, U.S. government net debt, not held by the government, held by private people. Black line, total debt. Red line's more important. Highest debt to GDP was reached in World War II. Here we go. Coronavirus could push us higher because look where we are in 2010. We are way up there. Congress and the president are discussing $4 trillion in coronavirus help. Taxes will fall because the government's going to slow down. The economy is going to slow down. So the government will get virtually all that money. No, not virtually. All that money is either going to come from borrowing or printing money. And I talk more about that. There's pre-coronavirus there, see? So who knows where we'll end up. Good news, all right? The U.S. government borrows at the world's lowest rates. It's borrowing at 2% because it's the safest investment in the world. So investors who buy bonds around the world, and most of these investors are Italian corporations and other governments, are willing to charge the U.S. government the lowest interest rate because it's safe. As a matter of fact, U.S. Treasury bonds have been rallying like crazy through coronavirus, and if people owned long-term U.S. Treasury bonds, they made a lot of money, but they're getting to the point where they might not be able to rise anymore, and that's what we can get into that here. Good news number two, rates are falling during coronavirus, okay? So that makes it even cheaper for the government to borrow if they're going to borrow more to get us through the tough times. And here's the danger now. Printing money can lead to inflation, but they will. Here's one thing you do know. The U.S. government will pay its debts, but it might start paying it by printing money. And if they print money and they print too much money, everything is going to get a lot more expensive. And people who they owed money, in a way, they cheat them. If you owe somebody money in your government and you print a bunch of money and you pay them, well, your money's not worth that much. Then what can they do with the money you gave them? They lent you money, you pay them back, but now that money doesn't buy much. You know what you actually really did? You cheated them, right? If you cut the value of your money in half, your government, by just doubling the amount of money that's in circulation, and then you pay off all your debts, you just rob people of half of their money they lent you, right? Now, they might be glad you robbed them. What? Al, did you just go crazy? No, because they might realize something. The only way to get through this coronavirus thing might be that. See? If it gets to be biblical, it gets crazy, we may see something like that. I hope we will not, because the first table in this show was about how coronavirus is still small compared with the old historic plagues, right? We're getting perspective. It's the huge numbers day today. Get MorAlpha show huge numbers. More government debt could cause interest rates to rise. Hyperinflation plus high interest rates could slow the economy. A slow economy could cause taxes, prices, and rates to fall. When all this stuff starts falling, it's called deflation. Let me tell you, nothing probably scares economists more than that. Because when you have deflation, it's hard to get an economy going. Now, I don't think we'll ever have deflation. And if we have it, I think it'll be moderate. I don't think it'll last long because we have learned, because we have just more average education. We have the internet. We're more efficient. We have governments and economists that have learned to get through these crises better. So I don't see us getting into depression. And if we have a depression from this, which I don't think we will, I really don't, because China's already recovering. But I think we'll get a recession. It'll be a tough, kind of a tough bounce back, but it'll be a good bounce back. That's my hope, right? Seems reasonable to expect that. So that's what we start gaining when we look at real numbers, real huge numbers, that we understand. Now we have a proportionate amount of fear. Now we have a proportionate amount of responsiveness, and we've taken a proportionate amount of action in proportion, in balance with what we're facing. All right? Coronavirus role players. Here's what I mean. Who's going to run this thing? Presidents, prime ministers, royalty, president of the United States in our case, the Congress. We have a House of Representatives with 435 representatives and 100 senators. If you didn't know that, don't be mad that I reminded you, but maybe you don't. It's okay. So that's out there. That's Nancy Pelosi runs the House of Representatives because the Democrats have more seats. And I won't remember his name. He's on the news every day. Runs the Senate because the Republicans run the Senate because they have more seats. I can't. Holy cow. I can't remember who runs the Senate right now. I'll think of it. Maybe. Okay. It'll blur it out. U.S. Treasury manages. Now, why am I bringing up the U.S. Treasury? They're gonna be brought up a lot because they manage our cash. They pay the federal government's bills, and they do the borrowings. All those Treasury bonds. That's why they're called Treasury bonds. Who borrows money for the government? The Treasury does, and they issue bonds that are called Treasury bonds. Most important instrument in the world. All people all over the world buy the U.S. Treasury bond. It's one of the reasons the United States dollar stays strong. It's because they buy our Treasury bonds. By the way, actually, that's what gives us balance with the rest of the world. I'm going to give you a tiny bit of international economics. If we're buying stuff from people like crazy, they're getting cash. What are they doing with that cash? They're buying our bonds. So we're buying stuff from people with our dollars. They're taking dollars and they're buying our bonds. So we have a net surplus when we issue securities and a net deficit when we issue products. Okay. There are a few other nuances there, like people who work in the United States and send money home to other countries. But I just described the three biggest international flows of money. Okay. For those of you who care. What's the Federal Reserve? Oh my God, this show's getting really scary now, man. Look, that's a lot of reading. Let's do it. Are you ready? Federal Reserve, it's our central bank. It's relatively independent from the federal government, although the government could try to put pressure on it, and they try. And then some people even want the government to totally control the reserve, and that wouldn't be good because these are bankers. These are economists, and they are the foundation of our entire banking industry and that of the world in the end, because we have the most important banking system on planet Earth. And that's healthy also. Here's why you want them to be independent from the government. Because if you get a Democrat, he's going to try to get that bank to do stuff that's crazy to help Democrats and then harm Republicans. Can you imagine the battles that they would wage in Congress if they thought they could control the central bank and decide how much money to print or where to set interest rates or set all these banking rules? These Republicans and Democrats, they would be punching each other out trying to control that thing, because that thing is powerful, the central bank. It is important. All right, so they've done a good job mostly. A lot of people have theories. What do we call them? Conspiracy theories about the central bank. They're only to a small portion valid theories. Mostly our central bank does an amazingly great job for us. How do you know? Where is the evidence that our central bank knows what it's doing? Have you ever noticed when you drive around the United States that we get a few houses built here and there, and a few skyscrapers built here and there, and a few businesses built here and there, and internet infrastructure built here and there? How does the economy run? Right? Because this bank, partly and to a large degree, because this bank knows what it's doing. I don't always agree with what the bank does. I think they're too soft. I think they should keep interest rates a little higher. Why? Because people would save more money. We would save more money if interest rates were higher, and we are in debt. You saw that debt chart. The government's in debt. And because the central bank has kept rates on the low side, okay, we save less money. We have less savings. And now that we're facing a rainy day, we're not as strong. We may suffer the consequences. That's probably why we don't have the extra masks lying around. Probably why we don't have the extra hospital capacity lying around. Probably why we don't have all kinds of things like better bridges, et cetera, that we would have if interest rates were a little higher. So then we would save more money. So then banks would have more money to lend to businesses, or that we would just have in the bank for a rainy day as a country. All right. Well, anyway, what does the central bank do? Prints money, controls our money supply. And I'm going to have a fun story about money supply and Donald Trump for you in a second. Have a heavy influence on short-term interest rates. They say they control them. They don't quite, but they have a heavy influence on short-term interest rates. Worse, how can I say it? Wow, this has been an over an hour and a half show. I don't care. I'm on a rock and roll. I'm going to go through this show, get it done. I have more work to do. But they set, here we go. They set and warehouse retail. Let me start over. Federal Reserve is our central bank. It's relatively independent, prints money, controls the U.S. money supply, has a heavy influence on short-term interest rates, sets and warehouses retail bank required reserves. So retail banks are my bank and your bank, where we have our checking account. The central bank says you must keep reserves with me to make sure you're safe, and I hold them. Okay. Although the banks get to keep the reserves in their own vault, just so you know, but they belong to the Federal Reserve legally. The Federal Reserve can come and grab them, and they do sometimes, anytime they wish. Okay. Anyway, and they lend money to retail banks when it's really needed. They can lend the money to anybody when it's really needed, the central bank, and that is powerful. All right. They're called the lender of last resort. Oh, I remembered. Pretty good. And the rest of the world, who are the important role players? Again, we're talking about important coronavirus role players. Why? Because the way they behave is going to influence all of this stuff. Okay. The rest of the world's central banks are going to be really important. Why? Because if they coordinate with our central bank, they can do a better job. Investors actually can play central banks against each other, but that's another topic. Okay. Our Supreme Court could end up being important in case our government's doing stuff that really isn't within the Constitution, or the Supreme Court may decide that we can have more powers in the government and we can amend the Constitution, right? So that's where the Supreme Court can become very relevant when you get into a huge situation like this. State governors have a lot of power now in this scenario. Each state governor is a president of his own state. Don't forget. So they have a lot of power. They have a lot of ability to influence too, the federal government. Local government officials down to your mayor are now going to be way more present in your life, right? Because they're going to tell you if you can go to the beach or not. They're the ones who will shut down the beaches unless the state makes them or unless the federal government makes them. Medical institutions. Now you see doctors on TV being interviewed, don't you? And medical professionals being doctors, or people who administer and run like they run hospital. What do we call them? Hospital systems. What's a hospital system? I guess that's right. It's a bunch of hospitals that are all part of a chain, like Scripps or whatever. Okay, the military could play a role. What do I mean? They could be out there helping us in emergencies. Military are great they have trucks, they have young, strong men, they are organized, they take commands. They can do a lot to help us get through coronavirus, right? They're relatively young and strong. Let's say relatively super young and super strong. I'm jealous. Why can't I be 25 years old again? I don't get this game, man. Why did I get thrown into this swimming pool where I don't get to stay 25 forever? Okay. The police will play a role. Let's give them a break. People have been really down on police more than I am. I don't like police abuse. I don't like police racism. You guys call it profiling as if it were bad. I think it's extremely important to be balanced when we look at our police, because they risk their lives for us. Here I am driving down the street. The guy's risking his life for me. So let's say the guy gets mad at me and he's really rude to me. I don't like that. It's happened to me. Very little bit, but it's happened. I did not enjoy it. But if I see that guy the next day, I'm not mad anymore, because I'm thinking this guy's risking, this woman and this man or this person are risking their life for me. Most of them, the vast majority of them, do an amazingly great job. Do I think, oh, it's okay that they disproportionately, overly arrest and overly convict, etc. Minorities? Well, goodness gracious, no. All right, but I don't favor one side over the other. Meaning, I'm balanced. I'm balanced between the police and the rest of us. Why wouldn't I be? I'm balanced between the rest of us and them. I'm balanced between them and us. Right? Corporate business leaders are going to play a huge role too. I heard of some fantastic announcements today about certain people who are keeping people on payroll. Other persons are hiring people. Well, yeah, because they're going to be able to hire people. Oh, by the way, don't worry about the food supply. No matter how bad things get, millions of people, God bless them, will be out of work. There'll be plenty of people to deliver our food. So don't worry about food supply. There's been hoarding at the stores. Let me tell you, here in my home, there's a little more than there usually is, but not a ton more, not twice as much. There's some extra water and there's some extra stuff. But there's no panic here. I don't think there's any need to panic. Retail banks, wholesale banks, corporate banks, investment banks, hedge funds. These are the big role players, right? Now I should put this in here. I'm going to have fun in here. Let's add one more thing. Watch me edit this chart. I'm going to put in one text box, and it's going to have one word in it. All right. And it's going to be big. And it's going to be red. Okay, there we go. There's our, let's do something fun. Watch this. And now watch this. Here we go. Here's how you edit presentations. Role players. Okay, you and I, we. All right. Those are going to be the coronavirus, so role players that are going to get into this thing and take advantage of this opportunity to get stronger as a species. All right. Okay, let's talk about Donald Trump. This is going to be fun. Are you looking forward to this? Is this the only reason you were watching this show? He was born on June 1446 in Queens, New York. Father was a landlord in Queens and Brooklyn, as far as I recall. I read a little bit about him. A real estate investor. Was a successful man, very successful. Trump got his bachelor's in economics from Wharton, a great school. He didn't get a graduate degree. So to an investment banker like me, I say, I don't feel like somebody who gets their bachelor's in economics is somebody that I would assume, yeah, they have enough education to be president of the most powerful country in the world. On the other hand, you don't even have to have a college degree to be a great president. You don't. I know that. You know that. Everyone watches, a PhD. Everybody knows this, right? You can be a person that never went to freaking school at all nowadays. Get on that internet, train yourself, and become the greatest president there ever was, right? No matter what your background, you can do it. You want to be president? Do it. Don't let anything stop you. You don't have to have a huge education. Probably will help. I'm into education. I recommend it. Okay, I love it. It is religion for me, like other things like music and exercise, and cleaning, but and hard work. Maybe my worst religion, my worst addiction. But although people who know me know I love education, love to read, but I'm not naive. What really matters to me the most, my number one trait I'm looking for. Well, there's two. There are two traits I'm looking for in a person to be president, and that is how smart are they really. Right? And how ethical are they really? Smart includes informed. If somebody's got an amazing IQ, but they don't remember their middle name, they're not going to be my first choice for president. That would kind of be me with my memory. Okay, but if they don't have values, they could create an amazing amount of damage. Right? We know this. It's common sense. Any leader of any organization, from a family to a group of 3 people who are doing a project, an art project, whatever it is, if you got the wrong leadership in there, look out. And if you have good leadership, isn't it great? I mean, the minimum requirement, by the way, that we have for a good leader for anything, for a mayor, for any small business, we think of somebody that's ethical. And now we have Donald Trump, who I don't dislike. I've been watching the Donald on David Letterman for decades. Dave has more Donald jokes than anybody. He made more fun of Donald Trump than anyone. David Letterman was the highest paid person in the history of TV. And I'm going to say a large percentage of his income came from Donald Trump jokes. And I think he probably told that joke. Okay. In 1971, Trump took over the family real estate business. He expanded, upgraded it. He moved into Manhattan, whereas they were in Queens and Brooklyn. Now they moved into more prestigious, more expensive. And in Manhattan, he did huge things: skyscrapers, hotels, casinos, golf courses. Some of his businesses did go bankrupt. They're isolated from each other. There's a way to own businesses that are separated. One can go down, and the courts will not make you dip into your other businesses to force this one to survive. Is that good? Bankruptcy law? Maybe not, but it is our bankruptcy law. Maybe it is good. Because why? Because he was able to keep the other businesses running and keep people employed. That's an interesting question. So his somewhere I read, I believe in Wikipedia, and if I'm wrong, I'm wrong. And Mr. President, if I'm wrong on any of this, I apologize. And I'm going to fact check myself. and I'm going to go public and correct myself, but I understand that Trump received 500 million roughly, maybe I'm guessing in total in assets. I don't mean in cash, right? Could be, but I don't think so. I think it's the assets that he took over were around 500 million. He's turned them into 3 billion. That is a success story. All right? He's a businessman. By the way, if you care, Michael Bloomberg's net worth is 50 billion, and what he did is he created a trading workstation that is like you cannot imagine. Okay, take a rocket ship that's built by NASA, all right, and make it look cooler than anything else that you ever saw in your life. The coolest sports car. Okay, take that rocket ship and make that rocket ship able to be driven by your mom. Okay, by anybody. I'm making fun of moms now. Sorry, moms. I apologize. Have it be something that a kid could drive around, and they could drive at 1,000,000 miles an hour. It could stop on a dime. It could never get lost. It could get you anywhere in the world in an instant. This is what the Bloomberg trading station is for a trader on Wall Street, for an investment banker. I lived 24/7 for 2 decades on Bloomberg workstations. They're incredible. That's why he's worth $50 billion. Anyway, back to Trump. He hosted The Apprentice reality show. He owned the Miss Universe, Miss USA, Miss Teen pageants. And this is a sad side, bad side. I'm going to share this, right? I'm going to pick on you, Donald, a little bit. You paid this hush money, right? Including a woman named Karen McDougal. And so have other presidents done stuff. And I don't judge you and I don't judge them. But this is report card time for me. When you are running the most powerful economy in the world, most powerful military in the world, you are my president. I am a citizen. I pay my taxes. I don't mind paying them. And so, and this is a free country. And I say with no anger and frustration and no judgment, I don't think I'm better than you, President Trump. I don't think anybody is better than anybody. I'm calling what I see. And in a president, I think it's reasonable for even you to admit, looking in the mirror, that the more ethical is a president, the better. Now, if you think you're ethical, you find yourself to be ethical, because maybe the word sexual partners is offensive. Maybe I should have just put romantic partners in here. And I would have, because I'm a soft-spoken guy. You know what I mean? I don't cuss. I don't pick on people. I'm not argumentative. I'm not conflict-oriented. But I'm putting this out here so that people who are watching my show will understand, yes, I'm a capitalist, but I maybe lean a little toward Republicans, but it depends on the season. When the Republicans get carried away, I lean to the right. When the Democrats are getting in the way, man, I go both ways. I have voted for both sides very evenly, by the way, in my life. I probably voted half and half for Democrats and Republicans at all levels when I voted. All right. So anyway, here we go, Mr. President and my friends. You didn't have that background that we think of when we think of a president. Government history, capital markets, and it shows. All right, it shows when you make decisions. We know this. Those of us who are fortunate enough that we were investment bankers, that we watched the market, that we watch the way the world works, that have a good sense for how it works. We're on your case now because we see in some of the decisions that you make that you don't have that background. Okay, here's one that I must call you on just for it's an anecdote. It's only one example. Okay, but I'm going to call you on it, Mr. President. Here we go. In President Trump's recent announcement within the past week, that the Federal Reserve was going to increase the money supply, the president said the Federal Reserve would also buy treasury bonds, not realizing, Mr. President, that's how the Federal Reserve increases the money supply. You said, I have great news. Federal Reserve is going to increase the money supply. And not only that, even better, they're going to buy treasury bonds. Oops. That would be exactly as if I said, I have great news. This car is going to run faster. It's going to go from 20 miles an hour to 60 miles an hour right now. And even better than that, way better than that, I'm going to push down the accelerator. That's what you said. And you didn't know it. And for you to not have that knowledge of how our Federal Reserve works doesn't mean you're a bad president. It doesn't make you a bad president. That one anecdote does not. You could be the greatest president in history and not know and make that mistake. However, when I combine this with the fact that you have a degree in economics, sir, you have a degree in economics. You have a bachelor's degree from Wharton, and you don't know that the Federal Reserve increases the money supply by buying treasury bonds. That is its normal practice. Or you didn't know, because if you're watching my show, now you know. No charge, Mr. President. I'm happy to teach you. And if you want me to come and work for you, I'll do it. And you'll find me to be great to be around. I'll have fun, you know. And if you want to play a pushing game with me, like you did with some guy I saw on the news, come on, let's play, baby. You push me and I'll push you, and we'll have a great time pushing each other. And then we'll slap each other's back and we'll get some work done for this country. I'm here for you like I'm here for everybody. All right. Now, now I know you don't care who I am and what I say, but I'm sure having fun. All right. You do scoff environmentalism, and that is a huge mistake. Come on, take the lead. Don't pretend you don't know we have global warming. Don't pretend you don't know we could do better. The fact that we didn't join the Accord, I wish we joined the Accord, okay? Join the Accord. I forgot the name of it. It's the Accord for Protecting the Environment. Join it so we can run the thing. If we join it, we can influence everybody and we can make it as fair as possible. And we can do the best job of anyone at running that thing, right? We got the muscle, we got the brains, we've got it all. We have people from all over the world here. Plus the rest of the world will support us. Don't you know if the world watches our movies, they love us. They think we're cool, man. Why do they like our music? So take advantage of this goodwill that America built during World War I and World War II by saving us from Nazism, right? Pick that fight up again for us and let us take leadership and make the world love us again. They can't wait to love us. They want to see our movies. They want to dance to our music, all right? Because we're cool, man. All right. You don't even pursue a Republican pro global freedom agenda. In other words, a traditional Republican belief stance is that, you know, to be tough on, it was be tough on communism in the past, but now I'll call it pro-freedom, right? And now then you went and you abandoned the Kurds. You just let them down. They've died in battle right alongside us, right? They've sacrificed their blood. Come on now. You abandoned those people because you didn't know your history. You didn't know what was going to happen. You didn't listen to your generals. Look, I'm proud of you for not always listening to the generals. You're the president. We're supposed to have a civilian running the army, and I don't want the generals telling you or any president what to do, right? On the other hand, they do know stuff you don't know, right? So listen to these people and maybe be polite to them. I've heard that you're very tough on these guys in meetings. Not that they can't take it. They're military, right? So I don't cry for them either. I'm not worried about these guys. All right. You're an immigration hardliner. Don't be so hardline about it. Help people who've been here, who work hard to stay here. Please, come on. The rest of us all came from other countries except the Native Americans. And here we are. Eventually, we got to be part of the family, right? So make them part of the family. And yes, control the border. But when you control that border, don't tell people I'm going to keep people out because they're coming in and they're committing crimes. Oh, my gosh. We need a strong border for the sake of everyone, for Mexicans that are on the Mexican side and for Americans. We need a strong border to keep this country, the most powerful country on earth, strong and healthy. We need a healthy border just because it is the law. I get that. We need a strong border, by the way, to protect the jobs of the Mexicans that are going to stay here, right? So we get that, okay? But let's do it with balance and let's do it with compassion and let's enjoy. Let's get them on our side. Let's get this conversation going with a smile. Okay, and if we get mad at each other a little bit and push each other around a little bit, let's end the meeting always, like I'm going to end this one with a goodbye that says, look, I'm here for you. And if I don't always disagree with it, if it isn't easy, sometimes, well, it's not easy for both sides. All right, but I'm really here, even being tough sometimes, because I care. And there's no hatred and judgment in it. It's caring, it's passion. You're conflict-oriented, you're bombastic, dishonest. Honestly, you're a lot like my friends in high school and I. There are days when I wish I could hang out with you and have a Courvoisier, man. I think we might have a blast. Okay. You becoming president was an amazing achievement. Never did I imagine you could pull it off. And I tip my cap. Like I tip my cap to anybody that had a hit song. Most of what's on the radio, I don't even understand. And I don't enjoy musically. I don't dislike it. It just doesn't do anything for me. Right. But I'm on the other hand, anybody that had a hit on the radio, I congratulate because I've been trying for decades and I haven't done it. No, probably never will. OK, you have an opportunity now. So I hope you will grow. Your greatest strength is your focus. You have a huge amount of willpower. You are a pushy, person, and you are driving this amazing rocket ship, the United States. Right. So make it work for the whole world, make it work for us. You're only human. I don't judge you. I judge no human being. All right, last one. Conservatives and liberals. Man, this is a long show, and I am having a blast. Here we go. Here, I'm going to compare what conservatism looks like and liberalism looks like. You could agree with me, disagree with me, and then I'm going to show you where I stand. And you're going to disagree with that too. Pardon me, chewing ice. To my dentist, I say, I know I should not chew ice, but I'm addicted. I chew ice. All right, here we go. It's not been good for my teeth. All right. Well, let's start comparing them. One of the big things I think of, right, when I think of conservatism, to me, real conservatism is free markets, because I'm a business person. And I believe in the power of free markets to create powerful democracies, to create wealth, to create upward mobility. And so I lean strongly toward helping companies do well because they create jobs. No, I don't lean toward companies enslaving their employees. I don't lean toward companies that are heartless and don't care. I love companies that put a daycare in for their employees, right? So it's not that I go off the deep end, but I do support free markets. Here's the important word in free markets: free. Freedom. I support freedom. And to the extent that we can make the world free in every dimension, in every way, I support it. To the extent we can pull it off, let's do it. Let's go for it. How many human beings essentially were not free? No one's perfectly free. You could be in a free country and you could feel imprisoned by your marriage, imprisoned by your school, imprisoned by your job, imprisoned by your favorite team loses all the time. No one, I don't think free markets and freedom are going to automatically mean you're going to fly, jump up and fly because you're so free. But you know what I mean. You get what I'm getting at there. Okay. Whereas I think of liberal is, and I think of, and these are two things I support very strongly. Excuse me. On the liberal side is environmentalism. Conservatives are anti-union. Liberals are unionists. Conservatives used to support international trade, free trade, not Trump. Here, I'm going to turn this fan off. I think the fan is causing my asthma to misbehave. Here we go. I'm back. Okay. And in the past, unionists supported protectionism. They wanted to protect like steel mills. Okay, I won't give it opinions yet. In the past, conservatives were thought of like push more militaristic, push freedom globally, and liberals are thought of, and they are thought of as more domestically focused, right? Okay, fair enough. We know conservatives support gun rights way more. Liberals want strict gun rules, prefer smaller government, conservatives. And the other extreme, right? Liberals, they want like government-run healthcare, et cetera. Very, very much comfortable with much larger government, way more on the socialist side, right? I think that education has become less of a focus on the conservative side and more of a focus on the liberal side. But that gets a little complicated. But okay, I'll say that. I'll leave that generally there. And if you disagree with me characterizing it that way, I can get why. But this, I don't have time. The show's already so long. All right, conservatives want low taxes. Liberals want the rich to pay more taxes. They don't want them to pay more taxes. So really, nobody wants high taxes. Everybody wants low taxes, except conservatives want low taxes for them and don't mind if richer folks pay less tax. But whereas for the liberals, they're very concerned about the fairness, right? And it's true. Fairness is a concern. We're all at some point concerned with fairness, right? Conservatives are worried or even angry about immigration. Liberals tend to welcome immigrants. Conservatives are very much pro-life. Liberals are way more pro-choice. Conservatives think Democratic leaders are overeducated elitists. I see a lot of that on the news. I hope you think that's a fair characterization. I think that liberals think of Republican leaders, whether it be business leaders or government leaders, like just greedy, non-caring, right? Greedy should not be capitalized. Well, I've capitalized it all. Okay. Think Democrats. Okay. Conservatives think of Democrats as freeloaders, maybe as more criminal, maybe, I don't know. Because I think many conservatives don't mind the fact they're pretty rough, tough guys. Like I'm a tough guy. I own guns and I ride motorcycles. Don't mess with me. I got tattoos and I'll punch you out. So I don't know. Maybe they think they're tougher and comply with the law a lot more or less. It depends what part of the conservative side you look at. Because so many of my friends are conservatives. They'll never have a tattoo. They couldn't dream of having one. All right. And for all I know, liberals have just as many tattoos as conservatives. So I may be getting lost here. Anyway. Liberals think Republican citizens are racist goobers, right? So where do I fall in all of this? I had fun creating this slide, I must tell you. I support free markets and I support environmentalism. To me, the best way to protect our environment is to create a powerful economy, right? Don't weaken the economy, strengthen it so we'll have the resources to make it an energy efficient economy. There is no way that a weaker economy is going to protect the environment more. Okay. I don't believe that, because a stronger economy will make for more science, more technology. We will figure this thing out. It's our best chance that we have. There's no assurance we're going to be able to save this planet at this point. But to me, free markets give us a way better chance than not. Okay, anti-union or unionists, I'm in the middle. If a company wants to be unionized, unionize it. I support that union. If another company, employees and the owners decide they don't want to have anything with a union to do with a union, I support that. I'm in the middle. All right. And if you're a union, I don't support you cheating the union members by charging dues and just doing nothing for them. All right, which happens. And if you're anti-union, I don't support companies abusing their employees. I support companies treating their employees spectacularly well. So well, they don't even need a union. They don't even want a union. Right. It's not that I'm anti-union. But wouldn't it be beautiful if companies ran themselves such that no one even cared about a union, never thought about a union, because they love their work? So I say to companies, you want to not deal with the unions, create jobs and structure things such that people are challenged and they love their work. I support free international trade. I do not support protectionism. The only time I support it is if there's literally military emergencies. Other than that, free trade, free markets make everyone better. It's win-win. When China does better, we do better. When Senegal does better, we do better. When Oman does better, we do better. When Syria someday gets peace, it does better. We will all do better. Economics is not, if you're the second richest country in the world, you're doing worse because you used to be the first richest country. If they passed you, they passed you, right? It doesn't mean you're doing worse. It means they caught you and they passed you. If you're running a race and you get faster every year, but somebody else passes you, you're not doing worse as long as you're getting faster every year, as long as you're doing your best. So don't worry about the fact that somebody else passes you in a race. You know what you do when they pass you? Congratulate them, tip your cap at them, and tell yourself, maybe I can catch them next lap. But don't be angry at them for doing to you what you've been doing to others. You've been lapping people, right? America, we've been lapping people, being the most powerful country. And now when they're competitive with us, we don't like it. I'm not afraid of competition. I've lost, and I'll lose again. I've played baseball. I've lost. I've been struck out. I've been embarrassed. I've made goofy errors. All right, here we go. Conservatives were more militaristic, right? Whereas liberals were more domestically focused. Oh, yeah, but here's where I fall. I am on the side of pushing freedom, not getting carried away. I don't want to overthrow governments. I don't want to rebuild countries and force them to be democratic. No, I'm not on the deep end. But I do want the world to know that if they want us to help them preserve their freedom, we are going to be there with them. First of all, by setting the example of being a free country and showing them the fruits of freedom, right? And inviting them and welcoming people to come to see and experience, so they won't think that freedom is just in a movie or in a book or a myth or a dream. It is reality. This is why people come to this country more than to any other country in the world, to live and to work. This is an amazing place, mostly because, to me, two things, because we have people from everywhere. Some people call it diversity. I just call it coolness, because to me, coolness is way better than just saying it's diverse. Some people even get freaked out. They're worried about the word diverse. Think about it, man. How cool is it that we have everybody here? Anyway, so there it is. But when I say militaristic, what I'm saying is, I was born 13 years after World War II ended, and I wish we were a species where we would never, ever have another bomb, not another gun, not another bullet, not another offensive phrase thought, thunk, said, or done, okay? I wish that were who we are, but that's not who we are. In this real world, if you have a strong military and you're the most powerful country in the world, those two things correspond to each other. Right? Who do you want to have the most powerful military? Some other country like Russia, who is not as internationally responsible, and who is this little country that tries to beat its chest and pretend that it can compete with the rest of the world when it's not. It's nothing wrong with Russia. I love Russians. Love Russian music. All right, love Russian. I got even Putin. This guy, he'll take out an enemy. He has taken out enemies in England and London, right on the streets, right in restaurants, right in hotels. Read about it. He's taken out, has had them assassinated here in the United States. On the other hand, if we didn't have Putin keeping Russia stable, who knows what would happen in that country? I'm a realist. I am a realist. All right? A realist with a good, strong dose of idealism, but I'm a realist. Okay, do I support gun rights? Yeah, but I lean more toward being very strict. Do I want everybody to be able to own a gun? Yeah, everyone who is has no legal, you know what I mean, has a great record, right? Really clean record, right? Who's proved financial responsibility too, who pays their taxes, who can have people that can attest to their being responsible. It could be your teachers that you've had at school, it could be people in your community, it could be your doctor, people that could attest to say this is a person that by all means is has every right to own a gun. I wish our rules were really strict. Also, I wish guns could be designed so that it'd be really hard to fire it other than by the owner, so that we don't have accidents. But that stuff it's tricky because you don't want a gun to be so cumbersome that you can't protect your home. So I get that that's a nuanced issue. I prefer much smaller government because then you're more free. Here is what real liberalism is. In the old days, the government ran everything. The chief ran everything. The king ran everything. And the rest of us were serfs. Okay. And liberalism, the history of liberalism going back, was that we made government smaller and smaller, and we made individuals more and more free. That is true liberalism. And that's what the Republicans have stood for in the past, right? But in the United States, that got reversed. That concept of liberalism and conservatism got reversed. So we got it backwards, really. But liberalism is really small government, all right? And how am I now? If a liberal is getting crossing your eyes right now in America, and you're thinking I'm calling you a conservative. Here's how I mean that. If you're a liberal, I'm calling you conservative in this sense. You're trying to conserve power within the government. And you got to be careful. You must be careful, please, when you give the government too much power, because they could abuse that power. If they're the government, think of communist Russia and prisoners being sent off to the Gulag archipelago, and Stalin, or was it Stalin killing 2 million of his own people? I mean, come on. Smaller government that is efficient, that is responsive to the people is ideal. And that's a liberal notion. Okay. I do like government-run healthcare, only for temporarily, or only maybe mixed with a half private, half government. And I mean private, meaning only 2 or 3 privately owned healthcare companies to make everything competitive. Because let's face it, our medical expenses are preposterous. We know that. And the one of the big reasons it's so inefficient is so redundant. It's unbelievable. And medical professionals, there's a shortage. So they're overpaid. Put up more medical schools, government, please. Train more doctors, okay? And then they won't charge as much. They'll make less money. Yes, you doctors out there don't like me right now because you will make a lot less money in an ideal, optimal economy where you really earn what would be your economic value that you create. You earn way, way more than that on average, in my opinion. And if I'm wrong, I don't mind if I'm wrong. And if someone proves me wrong tomorrow, convinces me, I'll come right on this show and I'll say it. But it seems obvious and clear to me that medical, particularly doctors, right, get paid disproportionately high. So do other professions. Okay? And if we could control that, that could be an immense savings for everybody. And doctor, instead of making 2 million or $1 million a year, if you only made 200-300 grand a year, you would live great, right? You'd educate your kids, you'd go on vacation, you'd be fine. You might, who knows, you might be happier. Nah, maybe not. That was pushing it. Okay. I think that the tradition was more for, right now is more on the liberal side. I think I'm more with the liberals that want less expensive education. I don't want to do a Bernie Sanders. I keep forgetting his last name. I don't want the college education to be free. I think paying half is great because this way a student is invested in their education. I want low taxes. I don't necessarily want wealthy people to pay too much more tax. Yeah, let them pay a little more tax. Progressive tax rate is good, but don't get carried away because you'll slow down the economy. And concentrated wealth that gets used as capital is positive for the economy. And let's face it, to the extent that you're rejiggering taxes to move money from here to there, you are lowering freedom. You're taking people's freedom away from them when they're earning more money by doing great things, and then you're pulling a higher proportion of their money away from them. No matter what their background, no matter who they are, right? Worried about too much immigration? I'm in the middle. It's important to protect our borders, but I welcome immigrants, of course. Let's just do it in an orderly way. Let's control that border, of course. Let's control it from vandalism, not vandalism, but what do we call it? Contraband. Let's control it from guns and drugs crossing the border and crime crossing the border, of course. So both issues are just as important. I would balance them. I am neutral, pro-life, pro-choice. Make your choice. If you're pro-life, then live that lifestyle. If you're pro-choice, live that lifestyle, right? Some people would say that makes me pro-choice. No, I will tell you that I wish we were in a world where there were never an abortion other than the most dire medical emergency, where a mom's life is on the line and there's no hope for the child ever living maybe, right? Other than that, no abortion. That's what I wish our world were like. I know the reality of our world. That's not the reality of our world. And so that's why I respect when people say that pro-choice can work for them, right? So I respect both sides. I lean a little more toward pro-life, but again, politically speaking, no, I'm in the middle. I respect both views. I'm not a woman. Maybe if I were a woman, I would feel way more strongly, one way or another. Okay, conservatives versus liberals. Do I think Democratic leaders are overeducated elitists? No way. Do I think Republican leaders are overly greedy? No. Greed is just a human condition, of which I have a little bit of a share of that myself, just a little. A healthy dose. That's why I became an MBA and I became an investment banker. Think Democratic citizens are freeloaders. Well, that's what conservatives may think, but I don't think that. Go to Mexico, watch. Average unemployment rate in Mexico, 2%. Unbelievably hardworking people. You have to see it to believe it, how hard my Mexican family work in Mexico. And I mean, estoy hablando como un mexicano actual. I'm not just calling my Mexican family conceptually, right? I'm talking about my uncles and cousins when I've gone and been with them. How hard they work is absolutely astonishing. And what they've come and done in America has been wonderful. They've come and worked so hard here, and I'm so proud of them. Not least my dad. Here's this thing I pulled up about abortion. There's way more information here than we have time to go through. I didn't even do the bullet points. I just say come back and look at this chart that I found, because it's an interesting thing. I learned that men are more pro-choice than women. I didn't expect that. And then the other stuff I found, let's look at the bullet points. Younger are more pro-choice, more educated, more pro-choice, more wealthy. Caucasians and minorities are similar in pro-choice. I'm weird because I'm both, right? When you're a minority like me, I'm a Latin Caucasian kind of, something like that. Anyway, it's fun. All right, liberals are far more pro-choice, of course, than conservatives, and the other way. More religious people are more pro-life. South is way more pro-life, and everybody else in the country is more pro-choice. And then I didn't expect, but I learned. That's it. Okay. I have a new flag for the investment revolution. This show is finally going to end. Aren't you glad? So this IR stands for investment revolution, and the A's stand for alpha. Here we go. Green stands for earnings. Red stands for the revolution. A is lowercase alpha. First letter in the Greek alphabet, and it measures investment efficiency. Alpha can be below zero, above zero. Below zero means you didn't do so well. Zero means you're average, which is good. And above zero means you've done great. Again, average alpha is good. Zero alpha is okay, because that means you've made what you deserve to make based on the amount of risk you took. This is last couple slides. To me, investing, I want it to be thought of as a human right. I want everyone in the world to be an investor, and I'm not kidding. This is my ultimate vision, okay? And there are people out there maybe who already promote this. I'm not aware of it. So maybe I'm starting something new in proposing. I'm going to create a constitution for investors all over the world. And maybe it exists, so I'll look at what exists. But here we go. Investment education. I want it to be part of high school economics. I want university degrees of every degree to have at least one finance course, because every professional should understand that the Federal Reserve sells treasury bonds in order to increase buys treasury bonds in order to increase the money supply, and vice versa. They sell treasury bonds to shrink the money supply. Okay, I'm for checking and investing in retirement and tax accounts all to be one account. Think about how efficient that would be. And I believe in democratic trading platforms. Now I'm speaking to you trading platforms out there. Probably nobody who's a trading platform cares who I am or is listening, but this is because this is part of my vision. Trading platforms are not completely democratic, meaning there are people who have an unfair advantage in trading platforms. That is a certain category of high-speed traders who just use algorithms to beat everybody else by being the quickest at reading bids and offers, and they don't have to take risk. They don't have to take any risk. All they have to do is just run a good, smart algorithm and keep it learning through artificial intelligence. And there are ways to prevent them beating everyone else, because the only way they deserve to earn returns is to take risk. Investing is not going in and being a middle person who never takes risk. That's not investing. That's being a middle person, but that's a middle person that we don't need at all. They'll argue they create liquidity. Now I'm talking to you guys. Oh, we create liquidity. We put more volume in the market, right? You guys are way more than half the volume of the market right now. And you are moving prices in a way they would not move if we just had only informed investing. There is a degree to which liquidity does help that. I'm not ignorant about this thing, right? There is an amount of liquidity below which we would be less efficient. Right? But you guys are not adding any more efficiency at this point when you're taking away return without taking any risk. You know who you are. You're front loading, period, pure. That's what you're doing. Okay. Now, I'm not mad at you guys either because I get what you're doing. And I get that if you don't do it, the other guy does it, and you're in a competition. And I get that you don't always win every single time because the other guy figures out what you're doing. He mocks you. He blocks you. He hits the market and he stuffs trades, right? So that you can't trade anymore. And you may even know each other and come to blows sometimes in a bar. I know all this is happening. High-speed trading with you hedge funds that do this stuff. All right. But here's what I'm going to advocate for you. And probably it'll never happen, but here's where I'm coming from. I want to create market platforms. Every electronic platform will be required to randomize the order flow of every bid and ask within a small pocket of time and keep randomizing. So randomize maybe every thousandth of a second, all the orders that came in that thousandth and fill them in the next thousandth. And have blink, take orders, fill orders, take orders, fill orders. Every time orders are taken, randomize. Computers can do this now. And as soon as orders are randomized, the order, now they get filled. And that will take away your speed advantage. But we will still have all the liquidity we could ever dream of for us to have efficient markets that consume information and allocate capital optimally, because that is ultimately what an efficient democratic trading platform will do. And hang on to your seat, Mr. Dark Pool, high frequency cheater. Let me tell you what would happen if we got a democratic trading platform. You would become more wealthy and with integrity, having created value for us. Then you will have earned what you have, and you can go talk to your children and look them in the face when you tell them they should brush their teeth. That's why that slide is in there. More about investment democracy. Every company that employs anybody should pay some of their compensation in shares. The higher you go up in the company, more shares you own, management will control the company. That's fine. And there could be outside investors who control the shares. In other words, employees, I need to rewrite this, will never control the company. That's not their place. And they won't run it better than management, and they won't make better decisions than the ultimate outside shareholders. So other than employers, below management should have controlling share of the shares. That's only fair. Because if it were the other way, right? If an employee suddenly owned a company, he wouldn't want for his employees to be able to control him. So nobody wants the employees of a company to run the company. All right. Okay. So bonuses, pay at least part or all of bonuses and restricted shares. Offer bonuses to everybody in the whole company. Make the bonus pool include every employee, and then break up the bonus pool from the CEO on down and make it a party. Have a Christmas party every year and give everybody in that company in a big place, throw a big freaking party for them, hire a band and dance with them and hand them their bonus checks, and meet their wives and children. Have a blast. It is done. Some people do these things. You can do it. Even if you have a huge company with 100,000 employees, well, then do it at the local office level. But do it. And yes, it's good to make shares restricted. Because that way the person doesn't get his shares and run. Right? Somebody comes and works and makes a big bonus. We want some loyalty. That's only fair. And there it is. All right, here we go. Somebody, last slide, I promise. Believe me, unbelievable. Longest show I'll ever do. There is conversation in the news of shutting down stock markets and other markets, and I don't think that would work. I think that's a mistake because shutting down denies investors at all levels from getting out of the market when they decide they really want to get out. Now you're taking away the investor's freedom from getting out if they want to get out, or from the other investor who doesn't have access, who's been waiting for an opportunity to come in at a buy opportunity. You're blocking both opportunities. So I say keep that market open unless you are absolutely convinced there's no other choice, right? Keep it open. And this is a great illustration, this situation, for why it's so valuable for you to watch my show, friends, because if you learn what I'm teaching in my show, then these things that are happening with the market things that are happening with the market and coronavirus, you will be prepared for. You'll understand what's happening in the market, and you'll make a decision. If you want to sit by and watch, you'll know why you're doing it. And if you want to sell, you'll know why you're selling. And if you want to sit on the sidelines until some emergency comes and then buy. You'll know what you're doing. Knowledge plus diligence. All right. There's also conversation in the news of not allowing shorting, because you can make money when the market falls again. That would probably be a huge mistake, because shorting helps companies protect giant portfolios. It is hard to manage a big portfolio if you're an ETF or a mutual fund of investments. And if your investments are going against your clients, because you got a portfolio that your clients who own mutual fund shares own, you can just do a few derivatives. You can short some derivatives, and you can not insulate. It's the word for what happens when we get a vaccine. Anyway, you can I can't think of the word. You can protect portfolios with just a little bit of shorting futures, for example, index futures. So you don't want to take shorting out of the market. I heard a gentleman who's I believe he's a senator, on the news just today or yesterday, and I thought, please take him off, turn the microphone off. This is a person that does not, he probably, I could be wrong, he could be a PhD, man, he could be an ex-investment banker, but more likely, he does not have a background in capital markets or investing or in economics. And he means well. He's trying to protect mom and pop, but he is stepping into deep water that is not that deep. He just hasn't swum in that water. That's all. It's not that deep. It's very learnable, all of this stuff. Watch my shows. Giant, powerful institutions who make money shorting can soften the blow of the whole fall. They are the ones that can make money and keep the system running. Why? Because they can stay in operation. If everyone fails and no one can short and make money, and then we all go down. But if somebody can concentrate capital by shorting, they are the ones that can come back and rescue the whole system. So don't take shorting out of the market. It is an extraordinarily powerful tool that we have in modern economics that serves all of us. I think that might be my last slide. If you hung in there through this show, you're my hero, because I barely could put up with myself this long. So this is an emotional one for me because of coronavirus. I'm already this way in my shows, but today I was definitely on fire because coronavirus has lit a fire under me to help us in any way that I can help us through coronavirus. That's through understanding what's going on with this blend of what's going on in government, markets, and what's going on from that historical perspective. Don't judge China. We need friends in this scenario, man. Make friends with China. Hold people accountable, yes, but there's a way to hold your children accountable. There's a way to hold China accountable. Not that I think of you as my child, China. I'm just conceptually saying we can hold each other accountable, looking each other in the eye and making and saying, I feel you are responsible for this. If there's a way to have reparations that make sense, that are fair, let's have them. Let's have you acknowledge that you're accountable, and let's have you provide what the reparations can be. Or maybe we don't have reparations. Maybe we just have new international agreements that prepare us for these situations, right? And maybe you become the leader. Maybe because you oopsed this one, China. Maybe you become the best in the world at avoiding this stuff. Maybe you're a scientist. You guys have a lot of great scientists. You're wonderful. You come to America, you get great grades. You guys are dominating many of the best universities. Well, then use your fantastic talent to solve this and other crises, health crises. Help us solve the environment. Lead the world, China. If that's your role to play a role. You know, we're with you. We're not against you. All right. So this is the Get MorAlpha show. I am Al Mora, your host. I have broken all personal records, 2.5 hours on the air. I can't believe it. And I hope that somebody in the world might watch from from the MorAlpha micro studio. About how many square feet is this thing? 6 by 60 square feet studio that I have here. I say to you, I am here for you always. I am always here. Good night.